Bada boom bap. We here. Welcome. Back again, once again, time and time again, my friends. We ain't doing nothing. Ain't nothing changed but the day, for real. A little early morning live stream session. 2 live streams in one day? I must be on something. But nah, man, we just chilling, just kicking it. Really ain't got much to do. Got my coffee. Let's see if we can get a little tunes action. There we go. The go-to track, Lil Chucky B. But nah, man, we just chilling, just cooling. Come kick it. Come hang out. Let me know something. But I am in this Euro USD trade right here. I was running quite nicely. I don't know what happened, if some news came out or what. Let me know about the levels. Is the music too loud? Turn the music down a little bit. Make sure you subscribe, drop your boy a thumbs up. But we just kicking it, man, just cooling. Got the face cam on. Got the... Just built a new desk. I'm just gonna shut this. Just built a new desk yesterday, so... Yeah, I got an L-shaped desk. I keep looking over here because I got a second monitor over here. But L-shaped desk, it wouldn't fit where the old desk was. With, basically like my kitchen behind me in the background where you can see all my food and everything. My cereal boxes on my refrigerator. So I had to bring it in here, put it in this room. I kind of like this setup too, though. Switch some things around. Got out of the mode we was in. It was routine. Was doing the same things, same times, every single day. Switched it up. Brings a new little resurgence to the life. But yeah, this Euro USD trade, man. Hopefully it continues to play out, but it's not looking likely as of right now. I should have been like my boy Jay Staff. One of my students is doing really well. Really well. He took an AUD USD trade yesterday that played out really nicely to his favor. I found the setup himself too. That's what I preach here. I want you to be self-sufficient traders. I don't want you to be reliant on me for every single thing. I want you to learn and understand how to trade the correct way and then go out and apply that and find success. But he had this nice little trade right here for about 65, 67 and a half pips. He gained him about 3 to 4 R on the trade too. So yeah, man, go ahead and click the link in the description. Go ahead and join in, learn some valuable knowledge, some stuff that can't be disputed. This was my position. I ended up choosing Euro USD. Got to about over 3 R's on both positions now. I had 2 positions going, looking for a nice 4 R take profit, but both reached over a 3 R risk to reward, so I can't be mad at that. If they do come back to break even, was looking at some Euro GBP as well. Didn't get the trigger as I wanted to. And then I don't know what happened. Did some news come out? You know, I'm not a big news guy Wednesday. Oh, we had some people speaking. 4:15 though. This is the 6 o'clock candle. So what's been happening? Nothing? Why is the market acting like that then? Well, we got some USD news coming up today. Nothing too crazy. Matter of fact, let's see if we have anything really exciting coming up today. So not until about 10 o'clock Eastern Standard Time. Y'all let me know. Is the music too loud, too low? But yeah, man. Somebody asked me some questions in the chat. Oh! Somebody asked me something. We up here. We rolling. Tomorrow we have some speakings. Friday, bank holiday for Canadian dollar. You know how long it's been since I've been on my Forex factory or Forex factory. Bank holidays over the weekend. Must be a holiday all week next week. I'm just gonna be some Chinese holidays. What is October 10th for the United States? Oh, Columbus Day. I thought Columbus Day was in February. Am I tripping? What's in February? What holiday is in February? Besides Valentine's, obviously. What holiday is in February other than Valentine's Day? And I knew it was some Founders Day? President's Day. President's Day. February 22nd is President's Day. Okay. Not Columbus Day. Okay. But that's a bank holiday? Columbus Day? I didn't know that. What else you got going on? Nothing too crazy. We got some holidays coming up. Keep that in mind. What's been going on Forex Factory for a minute? I ain't been on here in a long time. Still looks the same too. Ooh. 40% of traders are short on Euro USD. 60% of traders are long on Euro USD. $23 weeks. Average short entry at 1.0321. Oh, geez, some people that's been in for a gripazoid. Sheesh. They getting some mana. 1.03. Jesus. Imagine me still being in this position. It took a trade. Around 8/12. So the beginning of August. First couple of weeks or so. Imagine if we were still holding that trade. 33R. But what's the likelihood now? See now, what is the likelihood that someone is going to hold a trade for 33R without taking some profits, without doing moving your stop loss, getting taken out by some of these random spikes back up to the upside? It's not likely. Not unless you back tested it and studied it and it's in your strategy to go ahead and let the market play out that way. So you can't coulda, woulda, shoulda. I'm not a big coulda, woulda, shoulda fan, but it would be nice if this just went ahead and started to break down. I don't know why it's starting to make moves to the upside, breaking structure after we failed to break lower multiple times. Even though we did get a break below. It's just really not looking too good on the daily time frame as far as the candle is concerned. But on the weekly, we still pushing. On the monthly, still pushing. We are coming to the end of the month here soon. What month are we in? September. How many days in September? 30? I don't know. January, February, March, April, May, June, July, August, September. Yep, September got 30. It's in the crevice. If you didn't know that either, you do your knuckles. So January got 31, February has less. So you do January, February, March, April, May, June, July has 31, I'm pretty sure. August has 31, I'm pretty sure. So you do knuckle to knuckle 31. September is in the crevice, so it's less than 30. October has 31, November has 30, December has 31. It works out. I learned it in like second grade.
What is this song? Run that back.
But yeah, we just cool, man. This is basically it. Got into this position yesterday. Let's go ahead and break it down. What do we have? Well, we had the monthly time frame pushing to the downside. Should probably take that target off because now we smashed through it. It's no longer needed. And if we do drop down to the weekly time frame, you can see we did break below some structure. So this was the target that I wanted to see get met. I wanted to see the market come down into this area eventually, and the market did. It was sitting right on this target line, then decided to break below, giving a clean close and break below. And then this next weekly candle started to make a move to the downside, I'm pretty sure. Let's see what it looks like now. Pushing to the downside on the weekly as well, so can look for more continuation to the downside because Euro USD has just been selling off. So we've been making lower lows and lower highs since May, June. So for the basically the whole summer, we've just been selling off. Lower lows, lower highs, lower lows, lower highs. It's really simple. It's nothing too complicated. Lower low, lower high, 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 lower low. You get the picture. Until we make moves all the way to the downside, we're going to create lower lows and lower highs. So I do not want to try to buy this market as of right now. Since we're making moves to the downside, I want to go ahead and look for a move to the downside as well. On the daily time frame, we're pushing to the downside even more aggressively. We would like to see some sort of retracement, but it doesn't have to come. So not necessarily needs to be there in order for me to trade. I can still look for opportunities. So if we're pushing to the downside with a strong momentum on every time frame, just about every time frame, you start breaking them down. So I'm moving to the downside on the monthly, moving to the downside on the weekly, moving to the downside on the daily. On the 4 hour, we are starting to make moves to the downside. So we had impulse, we had the retracement, we had what we thought would be the start of the next impulse, came back for a little complex correction, and then from there, I now have a lower high, and I'm looking for a lower low, lower high, lower low, lower high, lower low, lower high, until the overall lower low of the structure is created. So that's just on the 4 hour. So we're moving to the downside on the 4 hour as well. You can see that we just came into this area, we started to reject. We have the bearish candle that was printed. So once this bearish candle is printed, we now have the lower high to this level. So you have a lower high, lower high. Once this candle is printed, we now have this area as a lower high. You can just look for a move to the downside. Hold on, give me 1 second. Drop something in the chat. Getting a little toasty. Getting a little toasty, my boy.
Gotta turn that heat off. Yeah, it's a little chilly where I'm at. Ain't no way it's 38 degrees outside. You shitting me?
That's crazy.
Crack a window one time for the one time. But if we are on the 4 hour, you can see we are starting to make moves to the downside. So me, I found a good opportunity on the 1 hour. I said, hey, broke to the downside. We could come back for a retracement. If we do come back for a retracement, I would like to see it come in this area, somewhere around in here. We've had previous structure support. I want to see it act as resistance over on here, on this side. Once I did get that, the resistance come into the area and have some action. Basically, I don't want to do anything until I see what the market does at this point. So if the market continued to print bullish candles, then I would just leave this market alone. I wouldn't look for any sell opportunities. But once the market came into this area, rejected from this area, and made a push to the downside with these bearish candles, bearish engulfing as y'all like to call them, bearish engulfing.
Now it really is 38 degrees outside. Let me shut this window. I'm playing.
But a bearish engulfing, as you all like to call them, just signifies that there is some momentum. These candles are covering the amount. This one black candle covers the amount of ground covered from 1, 2, 3, 4, 5, 6, 7. Almost 8 candles. So these last 8 candles basically got engulfed by this one bearish candle. That's letting me know that this area is acting as resistance. So since we're pushing down on the monthly, pushing down on the weekly, pushing down on the daily, pushing down on the 4 hour, and now we're starting to find levels of resistance, and we are making moves to the downside, so we are trending. We've been pushing down. I want to look for sales. Now on the hour time frame, I've found a good place that once the retracement does come, it's going to most likely stop at this area, and then from there start to continue back into trend, creating a lower low, just an overall trend. The most common pattern in the market is an impulse, breaking some structure, a retracement, and another impulse. So if I know the market's going to do this on the monthly time frame, if I know I'm right here on the monthly time frame, and this is the pattern the market is supposed to do, it does it over and over and over, majority times than not, then I know that I can look for a continuation to the downside of the monthly pattern. Regardless of what the 1 hour, 15 minute, the 5 minute, the 30-second says, I can shoot for that because it is likely to happen. It's the most common pattern in the market. Taking a higher time frame approach and pattern. And I'm just going about it that way. So once I get the rejection on the hour, I know that this area is resistance. I want to wait for the market to come into this area. If the market never comes back and retests this area, so be it. Then I just don't get into a trade. But what happens? Price comes back, starts to reject. Once it rejects, I set my limit orders because I want to see this area hold. And then from there, bada bing, bada bing, bada boom. There's a nice little drop away from the area. That's where I'm able to go risk-free went to sleep overnight, did somewhere around 3R down in there, and then we're currently where we are as today. So I still have faith that the overall trend in the market will continue. We're just at a little area right now, and even if it doesn't, I still have no worries. I can find another trade just like this. What we need is a breakdown below, tap right in there, and then we start to make moves to the upside. That would be ideal. Go ahead and let my position hit take profit. Yeah, man. So if you've been watching on the channel, paying attention, what I've been doing is I've been going through my trading journal, the trading signals that I've sent out. And we've come to a rough patch right now. So where we are right now, the current video is coming out. I'm in a losing streak. And that's what I want to say. Don't get it twisted, man. I might be in a losing streak in that time period. So we might be down about 4 or 5 R. In just that little section in a month, 2 months, a month and a half type time frame. But don't get it twisted. Your boy out here. What did they used to say? First it was like catching pips. Now we catching R's. Then we paying bills. All this other crazy stuff. Your boy gets to the baggage. I like that better. 8 plus R, my dude. If this hits take profit. I got 2 4R positions. One's like 4.5 R. So just imagine if this thing goes off, there's one for 4.1 and this other one's like 4.6. Ding, that package came. Somebody drop me a chat, man. Somebody drop something in the chat. What's the pair you want me to look at? Give y'all some free game. Give y'all some free gizzy. Give y'all some free gizzies. Some free gizzy, man. What's up, man? What's Euro USD won't do? I mean, I could do a full breakdown right now, but you know, we gotta keep it consistent. I will be back later on, 5:30 to 6:30, sometime in between there. More than likely, just gonna hit the majors real quick, because I've been up for 4 hours already. So I wake up early, man. When I hit them live streams, that's usually the last thing I do of the day. Like, that's usually the last of my obligations. So I really do want to possibly think about moving that up, maybe to like 3, from 3 to 4. Let me know what you think about that. Maybe start with that next week. Shoot. Maybe even 2. No, 3 to 4 I think is a lot better. or even 4 to 5. Excuse me. Got my cough here. Let me wake up, man. Euro NZD. I know you watch the live streams, my dudes. But look, back to mother freaking back. So we did one on Monday. That was after the explosion to the upside, right? It's just the same thing over and over. You got exactly as I said. In the last one, we had previous structure resistance. I want to see it use the structure support. Bada bing. Came in, rejected from that area, pushed to the upside. Little retracement came back, pushed to the upside one more time, and then bow. Look at that. Explosion to the upside exactly as I said. I can't stress, man. I know what I'm talking about. So yeah. What am I looking for? The exact same thing. Got the explosion to the upside over here. Came back for the retracement, exploded to the upside. What happened? Same thing. Come back, retest previous structure resistance. Now used as support. And what happens? Make another move to the upside. What do we want to see here? Come back, use previous structure. Because of this formation here, move down, move up, move back down. Explosion to the upside. Want to see it come retest the neckline perfectly to the T, and 80 to 90% completion rate on these patterns. You're going to get tired of me saying that in the live streams, on my videos, and everything. But until you really pay attention and listen to what I'm telling you, I'm going to just keep screaming it from the rooftops. 80 to 90 completion rate. What did it just do? It just completed at the neckline. I can't make this stuff up, man. I really can't. Nice little 197 pip take profit. Took about 4, 8, 12, 16. Half a day. Now I just want to see the same thing continue. If the market wants to do what the market's going to do, I don't blindly take these trades. I want to make that perfectly clear. Or I want you to understand wherever you may be in your journey, if you haven't gotten to this point yet, you are waiting to see what happens at your areas of interest. You don't necessarily trade once price gets straight to your areas of interest. Does that make sense? So for instance, let's take this back. Say my area of interest, right? We've done everything. We already know the analysis. We want to see the market make a move to the upside because we're breaking structure and creating structure, breaking structure and creating structure, breaking structure and creating structure. So when we go down, I would like to see the market come to previous structure resistance. Over here, and have that area be used as structure support over here. Now, do I just get into the trade right now because the markets came into this area, and I just put my stop loss somewhere and I put my take profit somewhere? No, for me, I actually need to see the retracement complete before I can even find my stop loss and my take profit. So it's almost impossible for me to get into a trade without letting the market do what I'm about to explain to you. So none of the markets come into this area. That's good. That's step number one. if I anticipate something, which is not good, we're not anticipating, we're reacting to what's going on. But in my mind, I can prepare for what I expect to happen. And if the market plays out according to how I expect it's going to, isn't that a good indication that it's going to continue to play out the way that I think? So I want you to understand that. So I want to see the market come back to previous structure, resistance, now turn support. Once it does that, it's like, step number one. My little crystal ball, I'm getting there. I wanted to see it come back to this area. Good. And once it came back to this area, I wanted to see it use this area right in here as some sort of support. So yeah, we can test below it with some wicks. But ultimately, I want to see the market break back above this area. I want to see it come into this area and not really break much lower. Let's see what happens. It started to come into this area. We rejected at this area to the T. So almost perfectly. Almost perfectly as to what I want to see. I wanted to see it come back to this area and retest it. Step number one. And then number two, I want to see this area be used as some structural support. Hey, these are two things already happening. That if I keep planning it out, won't it more than likely play out to exactly the way that I think the market's doing what I'm thinking it's going to do. Then if I place a trade, more than likely will play out the way that I think it's going to play out. Correct? Makes sense? Yes. So what happens? Do I just get in the trade now? Started to reject? No. Some other things, some other factors that you must learn about the market. What happens? The market didn't hold the support that we wanted it to hold. That's fine. That's okay. Because now that we've broken below it and closed below it, if we break back above it, more than likely it will hold then, because this area has been used multiple times either way. Then what happens? The market comes back, retests that area, and breaks back above it. Hey, it's doing exactly as what I'm planning for to do. It's doing exactly what I want it to do. So isn't it more than likely going to continue doing what I want it to do? Just some food for thought. Think about it that way. So now I can say, hey, even taking it back that one candle, it's like, dude, from here, if the market breaks back up above this structure area, then I can most likely place my order and be ready for the trade, because if it's done all this other stuff that I plan on doing, it has a high likelihood of going to take profit. It has a high likelihood of continuing to do what I expect it to do. So I'd say, man, I don't want to get into this trade until it breaks above this area. Boom. Broke above this area. Then what? Go ahead and set the trade. I got my stop below the low. Take profit up amongst the highs. Got a nice easy 3R risk to reward. And over 2 risk to reward. Oh, this is my jam. And I'll let the market play out, because from here I've had the market come back to an area that I wanted to come back to. Perfect. I had it reject from that area that I wanted to reject, or show to me that area was of some importance, which it has been shown that way. False break below, false break back inside. We've been holding multiple times to the upside of support, rejected multiple times to the downside, used as resistance once, twice. Let me go ahead and place my order, because if it's doing all of this that I planned on it doing, or I've set these prerequisites that I want to see the market do before I get into the trade, that gives me good confirmations and probabilities to know that my trade is more than likely going to play out in my favor. And if not, at least give me an opportunity to go risk-free, so I'm not risking anything in the markets. And then what happens? We let it play out. Boom, triggered in, explosion to the upside, able to go risk-free, and then take profit, Matt. 4, 8, 12, 16. Really a little less, because Take profit got hit before the 4-hour candle closed. So 2 hours before, 16 minus 2 is 14. So right about half a day, man. Okay, there we go. We had a little spike up to take out some of y'all that started to sell yesterday. Got in late. This is what manipulation looks like. This is manipulation. This is a manipulation candle. This is market manipulation at its finest right here.
Somebody asked me why.
Somebody asked me why. I really ain't drunk nothing out of this coffee for real. This mug was full to the brim. If you can see in there. You probably can't without me ruining my whole setup. But we starting to wake up now. Somebody asked me why this is a manipulation candle. But yeah, man. I built this desk yesterday. I'm really proud of myself. I built an entertainment system not too long ago as well. Amazon's gotten me for a minute. For probably like the last couple weeks, Amazon's been getting me. But it's all right. What's the point in living if you don't use it? Ooh, I think I'm gonna start doing that too. A little real talk, no pill talk. I had a realization with myself. I had to take a step back and realize I was in a scarcity mindset. I was always worried about running out. That was like the number one thing that was always on my mind. Running out of something. Running out of coffee. So I'll go to the store and I'll buy 2, 3, 4 cans of coffee. Or toilet paper. Shoot, this is the real stuff, for instance. So like 3 weeks now. About 3 weeks ago is when I realized that I was going to go buy some toilet paper. And I went to go buy some toilet paper because I ran out. But I didn't just go buy one little pack of 6 rolls or 12 rolls or 10 rolls. No, I went and bought like 5 packs of toilet paper. Because in my head, I'm like, I'll just buy it in bulk. So I don't want to come back. I'd rather buy it and then 4 months from now, realize I ran out, come buy some more. But in my head, it made sense, and I like that concept because a lot of things that I have now are like that. I bought a lot of things in bulk. Like I haven't bought laundry detergent since I graduated college. And that's a long time ago. Because I still have laundry detergent just stacked up. So I realized you will
you will
never
never
have
have
enough
enough
to
to
not buy
not buy
more
more
anyway.
anyway.
Like,
Like,
yeah, I could
yeah, I
go
could go
buy
buy
5 packs of
packs of
toilet
toilet
paper,
paper,
and
and
it
it
still
still
won't be
won't be
enough for
enough
me
for me
not to
not to
go
go
back to
back
the
to the
store to
store
have
to
to
have
buy
to buy
toilet
toilet
paper. So
paper.
what
So
is
what
the
is the
point?
point?
You're not
You're not
really
really
actually
actually
using the
using the
things. I
things.
was
I was
buying
buying
things
things
before I
before I
ran
ran
out
out
so that
so
I
that I
didn't run
didn't run
out.
out.
And it's
And
just
it's just
like,
like,
nah,
nah,
use it.
use it.
That's what
That's
it's
what it's
for.
for.
That's what
That's
you
what you
got this
got this
life
life
for, is
for,
to
is to
use the
use the
things
things
that you
that you
have.
have.
It's
It's
okay if
okay if
stuff
stuff
breaks. That
breaks.
means
That
you
means
got
you
the
got the
use out
use
of
out
it.
of
You
it. You
used it
used
for
it
what
for
it
what it
was.
was.
If your
If your
phone
phone
breaks and
breaks
you've
and
had
you've
it
had
for
it for
a
a
year,
year,
that's
that's
fine.
fine.
That
That
phone was
phone was
made for
made
you
for
to
you to
use
use
that
that
year. You
year.
get
You get
another one
another one
because they're
because they're
making
making
another
another
one
one
for
for
you
you
to
to
use,
use,
not to
not to
hold,
hold,
not to
not to
keep.
keep.
So I'm
So I
kind of
kind
getting
of
out of
getting
that
out of that
mindset
mindset
now,
now
and
and
kind of
kind of
not
not
going
going
crazy,
crazy,
like
like
spending and
spending
doing
and
all
doing
this
all
other
this other
stuff,
stuff,
but
but
I'm
I'm
more or
more or
less
less
like,
like,
all right,
all
I
right, I
don't need
don't
to
need to
buy
buy
2 and
2
3,
and 3,
4
4
packs
packs
of
of
eggs
eggs
every
every
week
week
so that
so
I
that I
never run
never
out of
run out of
eggs.
eggs.
It's
It's
okay to
okay
run
to
out of
run out of
eggs.
eggs.
You
You
buy
buy
something
something
new.
new.
Maybe
Maybe
when you run
when you
out of
run out of
eggs, now
eggs,
you
now
have
you
an
have an
opportunity
opportunity
to go
to go
try
try
something
something
different.
different.
And now
And now
instead of
instead of
eating the
eating
same eggs over and
over
over
and
and
over and
over and
over and
breakfast for
breakfast for
morning, now
morning, now
you're
you
having
having
something
something
different,
different,
something
something
new,
new,
and it's
and it's
changing the
changing the
way
way
that your
that your
life
life
ultimately
ultimately
plays
plays
out.
out.
And this
And
whole
this whole
concept,
concept,
I say
I
I've
say
been
I've been
thinking
thinking
about
about
this, or I
this, or
have
I
been
have
thinking
been thinking
about this
about
for the
this for the
last 3
last 3
weeks to
weeks to
change
change
from it,
from it.
was
Was
because I
because I
heard of
heard of
something
something
called
called
the
the
atomic
atomic
habit.
habit.
Atomic
Atomic
habit
habit
theory. I don't
theory. I
know
don't
if
know
you've
if you've
heard of
heard of
this or
this or
looked it
looked it
up.
up.
I
I
recommend you
recommend
do
you
look
do
it
look it
up
up
if you
if you
haven't.
haven't.
Is the
The
music too
music too
loud?
loud.
Atomic
Atomic
habit
habit
theory.
theory.
We got a
We got a
minute until
minute
this
until this
candle
candle
closes, and
closes,
it
and
is
then it's
not
not
closing
closing
how it
how it
should
should
close.
close.
I need
I
you to
need you
go
to go
ahead
ahead
and
and
break all the
break
way
all the way
down. But
down.
the
But the
atomic
atomic
habit
habit
theory is
theory is
basically
basically
saying
saying
that
that
you could
you could
change
change
one
one
little
little
habit
habit
that you
that you
do,
do,
and it
and
can
it can
ultimately
ultimately
drastically
drastically
change the
change the
outcome
outcome
of
of
the
the
future
future
of your
of your
life.
life.
So
So
you could
you could
change
change
from
from
not
not
eating
eating
breakfast
breakfast
or
or
doing
doing
anything in the
anything in the
morning
morning
until like
until like
lunch. You
lunch.
get
You
to where
get to
you're
where you're
going. Say
going.
you're
Say
going
you're
to
going to
school, you
school.
don't
You don't
eat
eat
breakfast. You
breakfast.
just
You
get into
just get to
school, and then
school,
by
and then by
about
about
lunchtime,
lunchtime,
you'll
you'll
have
have
a
a
Gatorade
Gatorade
and a
and a
chicken
chicken
patty,
patty,
or you
or
get
you
to
get to
work.
work.
You don't
You
eat no
don't eat no
breakfast. You don't
breakfast.
get
You don't
no
get no
coffee for
coffee
real,
for
for
real,
real.
for real.
You get to
You get to
work, and
work,
by the
and by the
time you
time you
really
really
sit
sit
down and
down
have
and have
something to
something to
drink or
drink or
something to
something to
eat, it's
eat,
like
it's like
lunchtime,
lunchtime.
and that's
And
your
that's your
habit.
habit.
There's
There's
nothing
nothing
wrong with
wrong
it.
with
You
it.
don't
You
get
don't get
stomach
stomach
aches,
aches,
headaches,
headaches,
nothing.
nothing.
You
You
actually
actually
enjoy it
enjoy it
because you
because you
feel
feel
a
a
little
little
less
less
sluggish
sluggish
and all
and
this
all
other
this other
things.
things.
But
But
let's
let's
say
say
all you
all you
did
did
for the
for the
next
next
however
however
long to
long to
change that
change that
habit
habit
or to
or to
start a new
start a new
habit was
habit
when
was
you
when you
woke
woke
up,
up,
you drank
you
a
drank a
glass of
glass of
water.
water.
It's like
It's
every
like every
morning,
morning,
instead
instead
of
of
not
not
doing
doing
anything,
anything,
getting ready,
getting ready,
doing
doing
everything
everything
exactly the
exactly the
same,
same,
getting ready,
getting ready,
brushing your
brushing your
teeth,
teeth,
taking
taking
shower,
shower,
comb your
comb your
hair,
hair,
kiss your
kiss your
kids,
kids,
walk your
walk your
dog,
dog,
whatever.
whatever.
If
If
now
now
you
you
drink
drink
a
a
glass of
glass of
water every
water every
morning,
morning,
you could
you could
have a
have a
different
different
trajectory
trajectory
on the
on the
outcome of
outcome
your
of your
life
life
from,
from,
say,
say,
when you're
when you're
not
not
drinking
drinking
water,
water,
being
being
stuck at
stuck
this
at this
job,
job,
and
and
retiring from
retiring
here,
from
not
here, not
stuck, but
stuck, but
retiring from
retiring
the
from the
same
same
job,
job,
same
same
everything,
everything,
to
to
now I
now I
drink a
drink a
glass of
glass of
water
water
every
every
morning,
morning,
and
and
I
I
now
now
have
have
a
a
waste management company or something that makes $300 million in revenue every year. You know what I mean? It's little small things like that can drastically change the outcome of your life. Is the theory behind it. Now that's just an example. I just pulled that out of my, you know what I'm saying? Trying not to cuss on stream.
Ew, that was gross.
But yeah, that's been on my mind lately.
That's really the thought process behind
scarcity mindset, talk, and all that was the
was the
atomic
atomic
habit.
habit.
So you
So
can
you can
change
change
one little
one little
thing and it
thing and it
can
can
drastically
drastically
change the
change the
outcome
outcome
of your
of your
life.
life.
But
But
yeah,
yeah,
that's
that's
been
been
what's up
what's
with
up with
me.
me.
I'm still
I'm
waiting
still
on
waiting on
somebody to
somebody to
ask me
ask me
why
why
this
this
candle that I
candle that
have
I have
highlighted is
highlighted
a
is a
manipulation
manipulation
candle.
candle.
Ooh.
Ooh.
Getting
Getting
that
that
push to the
push to the
downside
downside
now.
now.
But
But
yeah,
yeah,
man.
man.
Two
Two
live
live
streams in
streams in
one
one
day.
day.
What
What
up,
up,
though?
though?
I'm gonna be
I'm gonna
on
be on
here
here
from.
from.
I think
I
we
think we
came on
came on
about
about
6.
6,
So I'll
so I'll
probably come
probably
on at
come on at
about
about
6
6
later on
later on
tonight.
tonight.
We just
We just
rolling and
rolling and
rocking,
rocking,
rocking and
rocking and
rolling. I'm
rolling.
just
I'm just
chilling for
chilling
real,
for
for
real, for
real.
real.
Just kick
Just
it
kick
with
it
your
with your
boy.
boy.
Somebody come
Somebody come
hop in the
hop in the
chat.
chat.
Somebody hop
Somebody
in the
hop in the
chat,
chat,
man.
man.
I got the
Got the
question for
question
you
for
right
you
here.
right
If you
here.
want
If
to
you
know
want to know
what to
what to
ask, I
ask,
don't
I
know
don't
what
know
to
what to
say. What do
say.
you
What do
mean
you
hop
mean
in the
hop in the
chat? What
chat?
do I
What do I
say,
say,
bro? There
bro?
you
There
go,
you go,
right
right
here.
here.
Yeah,
Yeah,
somebody come
somebody
in
come in
here and
here and
drop a
drop a
pair,
pair,
and I'm going
and
to
I'm
give
gonna
you a
give you a
nice
nice
little
little
signal on
signal
it.
on it.
I really want to do some analysis too, but I'm gonna save that for later. Ooh, what's gold doing? Nothing but just following market structure. Move down, move up, move down, move up, move down, move up, move down, move up, move down. That's what I'm expecting. What about you? I mean, yeah, it would be nice if you get a retracement. Back up into some of these areas. But I mean, we have been creating lower lows and lower highs, breaking below structure. Not only breaking, but breaking and closing below structure. I wouldn't expect anything less, but more continuation to the downside on a lot of these USD pairs. Where's GBP, USD look like? Oh man, I low key would have been mad because I know I would have had a position something like this. I'd have had a position something like this. I'd have had a position something like this. And you mean to tell me that this spike would have came in, spiked me out? Spike me out, break even. Then next candle. Matter of fact, spike me out, break even. It would have. Spike me out, break even. I'd have been done. Probably wouldn't have paid attention. There wouldn't been any type of setup for me to look for a re-entry yet. Until the candle closed, see that it closed all the way down here. Now that the market is starting to fall. I'd have been heated. But it happens, man. It happens to the best of us. It's just a good thing that a lot of these USD pairs are correlated. So AUD/USD is pushing to the downside after a spike. NZD/USD is probably pushing to the downside after a spike. Like there was some good entries yesterday for moves to the downside. And then also if USD is first, you obviously are having a push to the upside. I mean, it's just the most common pattern in the market. Push to the upside, come back for a retracement, retest previous structure, and then from there you want to see another move to the upside. And within that, you're going to create the structure overall of what you're trying to see. So I want to see higher highs and higher lows for a higher high to be created. And overall, I want to see higher high, higher low, higher high. For me to get that, I need to see on the higher high created, I need to see higher highs and higher lows. Then when I start to get my lower high created, I need to see lower lows and lower highs until I start to see higher highs and higher lows again for the higher high to actually be created. But we had a little spike down. Now we're starting to get the push up. USD CHF, same thing. Actually had a really huge spike. But yesterday this market really exploded to the upside. Or this week. I mean yesterday, but all this week. This market has really exploded to the upside. We're here. Want to see the break above come back for some sort of retracement for continuation to the upside, which is exactly what we are getting currently. So the push to the upside from here could be possible. USD JPY still need to see the break above. What did it do yesterday? Nothing. This market literally did nothing yesterday. So if we look at it, That's all the action we had yesterday, boss. That's ridiculous. I'm talking about 86 pips, maybe. That is nothing. When you can get 1416, 1446. Set 300. You could get 300 real quick in a day, and we got 86 yesterday. This market ain't doing nothing. It did climb to the tops, though. Sun's starting to come up. It's about 7, 13, 7, 15 where I'm at. I'm on that East Coast. You know. What's oil doing? Oil acting according to plan. You know what I need to do? I need to go back and count all the R's, all the winning trades and losing trades, and add up the totals. Add up the total percentage that we've made on this channel. Just from this channel alone. Probably would do that on stream. It's not a bad little stream. I might make it its own video. Drinking coffee and a Snapple. Real fact. A group of goats is called a trip. Ooh. So when somebody be like, you a trip. They saying you smell like a group of goats. You look like a group of goats. And you are a group of goats. Not the good kind either. U.S. oil ain't doing too much. Somebody drop me a pair, man. I'm gonna give you a day trade or a swing trade. Might even do both. Posible. How you say it in Spanish? Posible. Possible. 80-90 completion rate on this pattern. If you wanted to take advantage or look to take advantage of what's going on. So currently as it is, the United States dollar is picking up strength at about 7 o'clock. So you know that Dollar's picking up strength. If it's the second currency in the currency pair, probably be excuse me. That currency pair will probably be making a move to the downside. So you look at things like U.S. oil, you find a nice little pattern. You see a pattern like this. There's a high likelihood that this might be completed as the way that the market's going right now. And then you know, new people into the market. London session actually, or New York session actually opens. Could be a change of hands. Could be a change in directions. But as it is right now, you can use everything that you know so far to see this pattern completed before we start to see a move to the upside. I mean, one of my favorites is the left shoulder, where we find a level in the market. We break below that level. And now we played around, but we immediately closed back above that level. So when you see the retracement, you don't want to see the market break and close below the left shoulder. Now this gives us a nice situation where we can tap the wick and end up closing all the way back up, continue to the upside. I'm calling this out, but hey, none of this could happen. We could just make a move to the upside right now. You know, the market could start exploding to the upside as it is right now. But with the market being so bearish and the dollar having so much strength as of lately, this could be a possible play on this U.S. oil, on this Earl. Somebody old granny. Go in there and give me that Earl. That Earl. Oh, your car is fine. You just need to put you some new Earl in it. Put in who? Granny? You want me to put who in my car? Who the hell is Earl? That's a weird ass name too. Earl. XPT made a move to the upside, a little spike, spiking some people out too. Oh yeah, we want to see this move to the downside. It's trying on the 4 hours. By the time 9 o'clock roll around, though, those candles look totally different. Them candles look totally different. From 6 o'clock to 8 o'clock, it might look the same. But as soon as 9 o'clock hit, at 8 to 9, that little hour in there, it'll do something to the candle. Looks like we're getting a nice little push to the downside on these USD pairs. mean, we could see a boom, bow, boom, bada beep, bow. Ooh. Could see something like that too. On XAU. Boom, boom, bop, bop, bada beep, bow, pow. There was some Australia news, wasn't it? Whoa. Don't need that many. Some retail sales came out. Positive. For AUD. Oh yeah, that's right. We got 8:30 news on USD. But it was some positive news for the AUD. I guess it wasn't too positive. As a matter of fact, this was the candle here. Look at that little manipulation. News. Did y'all know what news stood for? I got these little random facts in my head, man. News. So we did the knuckles to find out the calendar, what days have 31 and what days don't. News stands for North, East, West, and South. Fun fact. If you didn't know. But that was that little spike up to go ahead and complete. Zemos, coming, Patun, on the market. Break above structure, come back. Y'all gonna listen to me. I'm gonna get this ingrained in your head. Break above structure, come back. Retest previous structure resistance, now acted as support. And then confirm market structure for the overall higher high to be created. Boom, bop, bada beep, bow. Pow. The most common pattern in the market, man. I be giving y'all the sauce, but don't nobody want it. Straight to the T. To the T. Your boy, Nye. GBP, JPY. Ooh, I'd have been heated too. This is what you call market manipulations. This is a stop hunt. A lot of y'all don't know what a stop hunt is. This is a stop hunt. What was this? So 5 o'clock. What news came out? It won't let me do that. We already identified that there wasn't too much that came out, right? Oh, we had some speakers. That's right. You had a few speakers. But with that speaking caused this manipulation candle. Do you all know what the stop hunt is? Why is this a stop hunt? Why is this a manipulation candle? Why did it all happen at the same time? Somebody ask me in the chat. Or go ahead and drop a pair, and I'm going to give you either swing or day trade signal. More than likely give you a good opportunity. May not be today, may not be right now, but one to look for because I don't just blindly hop to a chart. Oh yeah, AUDJPY. This looks like a buy. No. We gotta do some analysis. We gotta find the best setup. But that's what I'm here to do. I'm gonna help you with that, man. Or if you got any questions about trading, go ahead and drop them in the chat. That's what this one is for. We're gonna have another one later in between 5:30 and 6:30 tonight. Just breaking down probably just the majors. So tune in for that. Make sure you are subscribed with the post notifications turned on. If you've made it this far, I do appreciate you, man. As a matter of fact, I want to give you your own little golf clap. Congratulations, you've made it this far. That means you are interested in learning the correct way to trade. Your first step. You're not enticed by what you see. Because over here, we're just doing straight chart work, man. Straight chart work. I'm not trying to sell you on my lifestyle. I'm trying to sell you on my knowledge. So I want you to look and listen to what I'm saying. And then go look at the market and see that is exactly what's happening. What I'm saying is exactly what's happening. So you understand that I have the knowledge to go ahead and help anybody find their way in the markets. So yeah, ask me some questions, man. Ask me a question. Drop it in the chat. I got one waiting for you all. If you need a question to ask, go ahead. Here's your question. Here's a question for you. It's 7:30. Ask me a question, man. Starting to get the move to the downside like we like to see. Euro USD, two positions on this taken yesterday. Spoke about it earlier, but nice little four, about 4.5, 4.6 are running on this. Currently sitting at about 2.8, right around 3R. Then I have another position. 4R position that is sitting at about 2.6. So we got some positions flowing. It's pretty simple. If you want to rewatch the stream, I went over how I got into this position, but basically it's the same thing I always say, man. Same thing I teach, same thing I talk about. We want to look at the market structure. Market structure is king. I'll take that over anything else, over fundamentals over indicators. Once you learn market structure, everything else becomes extremely clear. It's basically like the rules. Market structure are the rules of trading. Once you learn the rules, you can then learn how to play the game to your advantage. If you don't know the rules, yeah, you can learn how to play. So say for instance, we take a sport, we take baseball. Yeah, if you don't know the rules, you can learn how to hit, you can learn how to swing, learn how to throw, learn how to field. You can be good at all those. But if you don't know the rules and how the game is supposed to be played, you're just going to be messing up. You should be out there doing stuff great. Yeah, you have a great arm. You can throw really hard, but you're throwing it to the wrong base. There's nobody on base, nobody out. The ball is hit to you, you're throwing it to third base because you don't know the rules. Running safe at first. It's like you still losing. But once you learn the rules, like, oh, okay. Now I don't have to be the best player because I'm already better than the best player with the best tools. I know the rules. He doesn't. So even if I walk the ball to first base, I'm still better than him, even if the guy's safe, because they both safe. But you threw it way over here. Ball has to go over there. I know the ball has to go over there. I can use that to my advantage to help me get the ball over there in the multiple type of ways. So kick it, throw it, run it, sneeze it. Anything. As long as it gets over there. So yeah, learn the rules. But yeah, learn the rules. You can learn how to play. Then you start adding in your fundamentals. You start adding in your indicators. You start adding in your concepts. But if you don't know the rules, man, you could know all that, and it won't help you. Somebody drop me something in the chat, man. Ask me a question. I want to talk about something. Because if not, I'm going to keep talking about the same thing. That's the only thing I know. It's the correct way. I got some resistance right in here. This coffee's still steaming hot. You know, jaggy mount. Nice little. Was it tumbler, thermos, coffee mug. Another random thought I had the other day. You know the difference between a glass and a mug? I think I know the difference. What separates the two? If you think you know, put it in the chat. What's the difference between a glass and a mug? Yeah. So yeah. Back to it. I built this deck straight. Asymmetrical. They have some uniqueness to them. So I got the whole top one side of the desk. It's an L-shaped desk, so it's got two sides to it. That's why I keep looking over here. I got my other monitor over there. But it's two things, two ends to it. I put one end together. Realized I messed up. Had to unscrew one side. Screwed it back on. Did everything all good. Then I looked back down and realized I had one of the legs facing the wrong way. So I had one that was facing this way, one that was facing that way. I needed them both to be facing the same way. So I had to unscrew that one, put that leg, flip it around, do it again. Just put all this stuff together. Then there was a spot where one of the holes wouldn't fit. But guess what? I got that mug to fit though. You know what I'm saying? But yeah, I put this desk together. We switched it up. Got a new little spot, new little scenery. I know I'll be switching the backgrounds up. If you go through my videos, you can see it's probably 10 or so videos before. Nah, it's probably like 15, 16 or so videos, and then switch the background up. But yeah, we'll probably be rocking with this for a little minute now because I got everything the way that I need it to be. Let me know the volume right. Starting to get a little more viewers in here. I appreciate y'all, man, if you are in here. Been rocking for a while, but really I just want y'all to ask some questions. Let me see something. I got it set up. Yeah, somebody dropped something in the chat. Ask me something. I can go ahead and drop some knowledge on y'all. Or just ask a question that you have in trading. But rolling with this Euro USD since yesterday. Like I said, I had a student who smashed it yesterday. He got him a nice 3-4 trade for about 67 pips. Shout out to you. Jordan, good job. Really nice setup, very clean. Sniper entry. As they would like to say, risk-free, not too long after, straight to take profit, about 4 or 5 hours in the trade. Pretty simple, man. Pretty simple. You do one or two of those a week. Really nice clean setups that go ahead and play out. That's all you really need, man. Pretty soon we'll get you to where you can compound some positions. And then that's when it gets crazy. I mean, 4 on one trade is already crazy enough. You mess around and get 8 R on one trade, 12 R, 13 R. Then you're doing something. Then you only need one of those a week. And then that's what everybody's looking for. Yeah, it's nice to make a bunch of money. But imagine if you make a bunch of money without having to do it for a long period of time, without having to work for a really long time. So say you find you a setup on one day, and within that one day, you probably spend 2 or 3 hours analyzing, looking at that trade, being able to go risk-free, and then being able to add a second position to that for an equal risk to reward as your first position or greater. So first position 4 R, second position 4.5 R. So once you start doing that and start getting down, and you start seeing like, dang, 8.5 R on one trade. Why? I don't want to give any of these profits back, and I really don't need to trade for the rest of the week. 8% a week is really crazy. Now, it doesn't happen every week, of course. Can't always compound the positions to find more positions. Where you can't even just find straight winning trades. There's going to be some losing weeks. But these winners, these types of winners, they go ahead and take profit, cover those losses by great amounts. We rock for a little bit longer. Might go to
Might go
about
to
8
about 8
o'clock.
o'clock.
This is like
This
a
is like a
pop-up
pop-up
stream.
stream,
Like a
like a
pop-up
pop-up
shop.
shop.
I might
I
start
might start
doing
doing
these
these
a little more. Just
just
hopping on,
hopping on,
showing y'all the
showing y'all the
trades we
trades
in.
we
Of
in.
course,
Of
we'll go
course, we'll
through them
go
in the
through them in the
videos.
videos.
We'll get to
We'll
them
get to them
eventually.
eventually.
But right
But
now,
right now, go check out my playlist.
I think it's
I think it's
called
called the
Day
Day
Trading
Trading
Strategy
Strategy
Playlist,
Playlist,
or
or
how to day
how to day
trade.
trade.
There's like
There's
5
like
or
5 or
6
6
parts in it
parts in it
already.
already.
Those are
Those
all
are all
strategies that I
use.
use. Or I know at least two of them.
two of
Two of
them.
the
Two of the
strategies that I
strategies
use
that I
are in
use
that
are in that
playlist.
playlist.
And I give
And
it
I
to
give
you.
it to
Give it to
you.
you real raw. And I don't give you every single
Every
thing
single
because that
thing,
would be
because that
fair
would
to
be
the
fair to
people
the people
that did actually
did actually
purchase
purchase
the
the
strategy and get
strategy
into
and
the
get into the
course.
course.
But
But
the
the
concept is
concept is
there.
there.
The
The
concept is
concept
nothing
is
new. It's
nothing new.
nothing
It's nothing
crazy. It's
crazy.
nothing
It's nothing
secret.
secret.
It's just being
It's just being
consistent and
consistent
doing it the
and doing
same
it the
way
same
every
way
single
every single
time.
time.
Really
Really
understanding the
understanding the
strategy
strategy
and what you're
and what
looking
you're
at,
looking at,
understanding the
understanding the
market. Like I
market.
said,
Like I said,
learning the rules.
Market
Market
structure,
structure, market
market
structure,
structure,
market
market
structure.
structure.
Please, if you
Please,
learn
if you
one
learn
thing,
one
please
thing,
learn
please
market
learn market
structure.
structure.
From there, you'll be like,
oh
oh, snap.
snap.
Everybody should
Everybody
start
should
with
start
market
with market
structure
structure
first, not
first. Not
what's a
what's a
pip,
pip,
not
not
your lot
your lot
size, how to
size, how to
calculate lot
calculate lot
sizes, not
sizes, not
what's
what's
the
the
currency pair
currency
that
pair
moves
that moves
the most
the most
volatile,
volatile,
not
not
all this
all
other
this
stuff.
other
You
stuff.
learn
You
market
learn market
structure.
structure.
The rest of
The
that
rest
is
of that
like,
is like,
oh, it
it
coincides with
coincides
market
with market
structure.
structure.
The reason
The
I
reason
assess
I
my
assess my
risk
risk
differently is
differently is
because the
because the
market
market
structure
structure
is giving
is
me
giving me
different
different
stop loss
stop loss
sizes.
sizes.
So I'm
So
risking
I'm
the
risking
same
the same
1% on
1%
this,
on
but I
this, but I
understand
understand
how to risk
how to
this
risk this
1%
1%
because of the
because of
market
the market
structure. I have my
structure. I have my
stops
stops
protected
protected
above the
above the
structure, and this
structure,
one
and
ended
this
up
one
being
ended up being
31.7
31.7
pip
pip
stop loss,
stop
so I
loss,
needed
so I
that
needed
to
that
equal
to equal
1%, and then
1%,
this
and
one
then
was
this one was
25
25
pips for a
pips
stop
for a
loss.
stop
I
loss.
needed
I
that to
needed that
equal
to
the
equal
same
the same
thing,
thing,
and it
and it
does.
does.
And the reason
And the
I know
reason I
that
know
is
that is
because of the
because of
market
the market
structure. I know
structure.
where
I
to
know
put
where
my
to put
stop
my
loss,
stop loss,
and then
and
from
then
there I
from
can
there I can
calculate what my
calculate what
stop
my
loss
stop
is
loss
and my
is and
risk
my
and
risk and
everything. So
everything. So
market
market
structure, market
structure, market
structure,
structure,
market
market
structure.
structure.
Then we'll get
Then
into
we'll
your
get into your
fundamentals. Then we'll
fundamentals.
get
Then
into
we'll get
your
into your
supply and
supply and
demand zones.
demand
We'll get
zones.
into
We'll
all
get into
that.
all that.
But first,
But
once you
first,
learn
once you learn
structure,
structure,
it'll make
it will make
everything else
everything else
easier.
easier. Mm.
We'll probably
We'll
go to
probably go
about
to
8
about 8
o'clock.
o'clock.
What y'all
What
looking
y'all
at?
looking at?
I know y'all
I know
like to
y'all
be
like
on
to be on
GBP,
GBP,
JPY,
JPY,
pound
pound
yen.
yen.
I think it's
I
gonna
think it's gonna
possibly make the
possibly make the
move.
move.
Boy, that's a
Boy,
big
that's a big
manipulation
manipulation
candle right
candle
there.
right there.
That's no
That's no
good.
good.
That's just
That's just
stopping out
stopping out
everybody that got
everybody that
in
got in
yesterday.
yesterday.
Because I would have
Because I would have
definitely been
definitely
in
been in
somewhere around here too. Like,
Like
I can go
I
ahead
can
and
go
tell
ahead
you
and
that
tell you that
I know we
I
would have
know we
been
would have
looking at
been looking
something
at
like
something
this.
like
I think
this.
I've
I
already
think I've
done
already
it.
done it.
Could have probably
Could have
gotten
probably
a
gotten
nice
a nice
4R
4R
out
out
of
of
it.
it.
Being
Being
conservative, maybe
conservative,
gotten a
maybe gotten a
3.5 because I
3.5
know
because
this
I know
pair
this
is a
pair
little
is a little
volatile.
volatile.
But we'd have
But
been
we'd have been
riding
riding
risk-free,
risk-free,
looking for a
looking
move
for
to
a
the
move to the
downside, and
downside,
then
and then
pew,
pew,
stopped out and
stopped
then
out
make
and
this
then make
move.
this move.
Oh
Oh
man.
man.
But do you
But do you
understand what
understand
this
what this
candle
candle
is?
is?
Yes, it's a
Yes, it's a
stop hunt.
stop hunt.
Yes, it's
Yes, it's
manipulation. But do
manipulation.
you know
But do you know
why?
why?
If you
If you
don't,
don't,
ask.
ask.
Only stupid
Only
question
stupid
is a
question is a
question not
question not
asked.
asked.
Axe.
Axe.
I hate people that say axe, boy. Ask me something. No.
No.
Or
Or
axes.
axes.
He be
He be
asking me.
asking me.
You mean
You mean
asking?
asking?
Or
Or
asks?
asks?
I feel like that's a flex when I be saying asks.
Asks.
Instead of
Instead
axes.
of axes.
He axes
He axes me.
Do you mean
Do you mean
asks? Everybody can do
Everybody
that.
can do that.
Sick 'em.
Sick 'em.
That's all it is.
All it is.
Hey, my music
Hey,
jumping right now. I ain't gonna
I
lie. Got me ready to get in the booth. On me. So this was good manipulation. Good news candle. I just can't do it. If I hop to a chart and I'm on like the hour or the 15 minute, it just makes my brain hurt. I gotta zoom out. I'm not looking for these little 10, 15, 20 pip moves y'all be looking for. You know, unless it sets up right. But for the majority of the time, it's like 80, 120 pips we shooting for around here. Or yeah, CAD, JPY, Euro, USD. You know, I'm Mr. Prove It. That's probably the most offensive thing you can ask somebody or say to somebody is prove it nowadays. People get so mad. Prove it. But like I said, we shooting for 130 pips on this one, 116 pips on this one. Them 25, 15 pip trades just don't cut it for me no more. We was on CAD, JPY. See, just right here, it's like, it's too many candles. I don't know enough from the higher time frame. I can't make any decisions off of this. Let me zoom out. Let me zoom out. Then I can see what's happening. And it's like, we come into this area of support right here. This is what catapulted this move to the upside. So from here, market broke above, and from there made this move to the upside. Now we're coming back to retest that area. It should act as some support until broken through. So until this market breaks down below and closes below, I really wouldn't be looking for too much of sales, because it could provide a retracement going into today. This candle is not finished printing. We are quite bearish, but it could possibly see a little bit of retracement before we start to move to the downside for the break, grab some liquidity to actually break through that zone. But hey, we could go ahead and just flush right through it. Who knows? Either way, that's how I make my decisions. I need to see some stuff happening on higher time frames, and then I drop down on lower time frames to look for the opportunity. Because if we down on the 15 minute, we really don't know that this is a level of previous structure support or previous structure resistance now turn support. Excuse me. I mean, we do because I have a line there. But if we just were to remove that, it could look like, oh man, what are y'all gonna say? We came and spiked down below these lows. Y'all call that a liquidity grab. Ain't knocking you, but you're making it more complicated than it needs to be. No, we just failed to break lower. Doesn't necessarily mean we're going to make our way back to the upside, because this is an extremely bearish market. We have several levels of structure to break to the upside before we can start to look for possible buys. But if we're just down here on the 15 minute, you can get tied up into looking for a hero trade. Talking about got an imbalance. It just, I don't all the words y'all be saying, it's just like, what? What would y'all call this? An imbalance? So you need the market to come back here to feel liquidity to do something now. I could see somebody doing something crazy like this. See a move to the upside. Let me put my stop extremely tight. Right below 1 pip. Ooh, I'm looking for a 6R setup. And then on that, you don't even have a clearly defined take profit. You just want it to come into this area somewhere. So now you trying to do this hero move on the 15 minute, all because you started on the 15 minute. Zoom out. Take a look at the daily. Look at my higher probabilities. Let's see what we're looking at. Okay, so the market is currently down below. Structure support. Why would you be looking to buy this? Until the market breaks back above this area. Then when I could see it going to retest some of these zones first. But zoom out. We go on the daily, then the 4 hour, then it looks like, oh, okay. Maybe I should wait for some more breaks of structure before I start to look for an opportunity. You say once it breaks above there, or you could even drop down to the hour and be like, yeah, I kind of like that. And if the market does break above this area and gives me a retracement, I could then look for the continuation to the upside, because now we are broken above some structure. I could have my stop loss protected to where I know that if it gets hit, it's probably not going to be a good idea for the trade anyway. I could find some structure to protect my stop loss around in here, and then it makes a little more sense. Adding a little more confluence, and that's just because I started from the daily. Even if this move doesn't play out, I'll put some constraints or some confluences that I want to see in the market first, and then from there, I will act on it. And once again, my confluences come from market structure and just knowing the right things in the market. So multi-time frame analysis and structure the right way. And from there, you can make really good decisions. Market structure, patience, multi-time frame analysis, and proper risk to reward with consistent risk. That's what I'd say is what you need. Is all you need. Come on, Euro USD. You don't want to see me shine, do you? Y'all go follow my Instagram too. If you want some real life updates, follow me on Instagram. I ain't been too active this week on Instagram. Been chilling. Trying to get some things right. Get you a notebook. Get you some type of notebook to write down the things that you need to do. That's what I got. And this is what I've been working on this week. So you see the checks, the stuff I didn't checked off, the things that aren't checked. I still need to do. Wash my car. Find new car insurance. Buy another mattress. Get a new couch. Go to your main society. I need some sort of pet. I need something here. I might get a bird. I might get a ferret. Snake or something. I had a snake in college. Two of them. His name was Jake. Jake the snake. But yeah, I need to go get some type of somebody. Have him here chilling with me on the stream or just here. Then I need to sell some stuff. And count up total R's on the page. And it's getting closer to the first of the month. I need to go pay some people so I can have another month to live. Another place to stay. I'll knock out most of that today. Or at least try to. Furniture shopping. That's something that I didn't think would be so hard. It's harder than I thought, though. Or I'm just picky. Somebody drop a pair. Get you a free signal. Do about
another
5 minutes.
5 minutes.
Wake up in the morning, get paid. Damn, all I do is really trade. Oh, get it this way. Damn, just catch the wave. Who? What you say? Little nigga, all I do is just trade. Somebody asked me something, man. TRABE radio. 76.2. TRABE radio. Coming at you with the hot new bangers. Damn, son, where'd you find this? Come on, Euro USD. You know you want to give me some love. We got a minute. We got to menu it. I don't like this market structure though. Because we got the explosion to the upside. Just on the 15 minute. Started to create and break some structure to the downside. It would be nice to see this used as previous structure. Support now turn resistance for a continuation to the downside and then explode back up. Could possibly get that. But could also start to get a push. Retest here. A little break above and then from there. We got news at 8:30. I forgot about that. Hopefully it comes out strong for the dollar and can push Euro USD to go ahead and take profit. 8 o'clock. 8 o'clock. What we gonna do? What we gonna do? 8 o'clock come for you. See if over the next hour we can start to get the push to the downside. I mean, this candle did close bearish, so I like to see that. You got the next one you want to see. At least fill in the wick. Just go ahead and give me a little wick tap. That's all I need. That's all I need. It's a little 60 pips, bro. Just a little 60 pips. 60 pips. And we out of there. Oh. Been streaming for about a good 2 hours. Hour and 50 minutes. I got the best music selection. 73.2 TRABE radio. You are now listening to Really just chilling, waiting on Euro USD. That's it. I got some food I want to eat. Does coffee make y'all? Is that appetite suppressant for y'all too? I'll drink some coffee and then be good for like till lunchtime. Mind you, I wake up like 2, 3 in the morning. I drink my cough. Get a little energized. Hit the gym. Think of new content ideas, which, like I said, got a playlist that gives out the strategies that I use. It's not nothing crazy. Now there are some details that you can't get for free, but for the most part, simple concepts, something that you can go back and see and replicate over and over. It's nothing on how I feel. I never make decisions on how I feel. Because you can't replicate how someone else feels. So I take pride in having a mechanical trading system. Do something like that. We just gonna play around for about an hour watch. Really, we got 30 minutes. We'll see what happens off that news. It could be a good indication of what's to come for the rest of the day. If you know me, you know what I'm looking for. Might be another re-entry right here. You know what I'm saying? If we start to get some. What could I get off that? Could possibly have a add like another 2.5 to it. Could possibly have another setup. And then clock out about 10, 11 R. That'd be a good week. It's really about 2 days of trading. Not even two full days. So just yesterday and today. Looking for opportunities. Waiting for them to present themselves and then just let the market do what the market does. Started from the bottom. Try and get it out the mud. Try eventually have 100 people in here on this live. That would be nice. That would be lit. There we go. Starting to get a little push. Really, this could possibly be a good setup as it is right now. It's kind of lining up. Free signals if your ass. Free signals if your ass. TP's for your ass. GBP USD. Imagine if you had one of these entries, no drawdown, then bow. It's one of them candles too, where you don't have proper risk management. You don't know when to go risk free. You don't know when to go move your stop to break even. You leave your stop, leave your risk open. Price comes up here. You're like, dang, I don't want to lose this last little bit. Sometimes you might not even be trading with a stop loss, which Cardinal saying number one. You always put a stop loss. I've seen crazy things happen in the market, stuff like this, spikes that happen within seconds, hundreds of pips. You don't want to be in the wrong direction of those, especially if you don't have a stop loss. Trade with a stop loss, man. There will always be another trade. Always. So. But yeah, imagine if you're in here. I could just see it playing out now. Because at one point, I was that trader. No stop loss. Let me get in, over leverage, to start to move away. Nice. We're starting to move to the downside. I'm over leveraged where normal risk tolerance 1% would equal 4%. Say I'm risking 3R just because I picked a random number. I wanted to trade some standard lots or something. Now I'm risking about 3% to make 12%. Market moves 4% in my favor. I'm not aware that a good trade would only be about 1% in my favor if I risk 1% on the trade. And I'm actually at the profit of what a good trader or good trade would be. And I'm over leveraged. I don't know when to get out of the market. Boom, I have a nice 4% sitting right here. Say I have $4,000 waiting for me right here. I don't close. The market shoots up here. Almost stops me out. I'm down like 2.5%. 2,500. I close out because the market's moving with a lot of velocity. There's a whole bunch of levels in here. The market rejected off of this support and wants to make moves to the upside. Blah 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 blah. You end up cutting your loss. Then the market moves to the downside, doesn't give you a proper chance for re-entry. You enter in down here at this candle. Now the market's pulling back. You're in huge drawdown for the day, trying to get some loss. Blah, 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 blah. I just already know how it's going, man. I already know how it's going. I can look at the chart and tell you what the market is doing, the emotions it's invoking, the situations people are probably in. And that's because I have the clarity now. To know. When I look back at this, if I was in this trade, I would have been stopped out now. It would suck because the market would be in my favor. I'd be risk-free as well. But the market came back, stopped me out. There will always be another trade. Matter of fact, it's setting up for a nice opportunity to come within the next couple hours. So, come on, Euro USD is starting to pull back, man. But GBP USD is a good indication too, as well. Like I said, these pairs are correlating. AUD USD, all these pairs are correlating. Now this one doesn't look too well to see a continuation to the downside just off the 1 hour structure. But if we look at the daily, we're in no man's land. Who knows when the market's going to stop? On the 4 hour, we're still below structure, and this is AUD USD. We're still below structure support. Rejecting from that area, so yeah. On the 1 hour, it looks like there could be a move to the upside, but this is exactly what the market wants you to think. Not until it's confirmed do you trust what you see in the market. On the lower time frames. 15-minute, we have the most common pattern in the market. Like I said, it happens on all time frames, all pairs. Impulse retracement, previous structure, resistance, now used as support. You just want to see a continuation to the upside. And that's just on the 15-minute, just the 15-minute market structure, regardless of what the monthly, weekly, and daily is doing. That's what you want to see on the 15-minute. Now, does that coincide with what you have on your higher time frames? So you mark it up on your higher time frames. There's really not too much structure for us to go off of as of right now. From the higher time frames, we just know we're way below some structure support that would act as resistance if retested. So we could possibly see the retracement come today, but we would still need to see these levels of structure broken before we start to look for buy opportunities. As it is right now, we're just in perfect market structure. We're making lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. We just expect the market to do what it's going to do until shown otherwise, and then we react. That is how you trade. So regardless of what I got going on, I'm in Euro USD. The market is playing around right now, but it is currently below some 4 hour structure. We are close to the take profit. This area usually is a magnet to price. So it would be nice to go ahead and see that. Shoot around and hit take profit here within the next 15 minutes. Probably stay on till about 8:30, 8:40.
8:40.
I
I
decided
decided
I was gonna
I
get
was
off
gonna get
about
off
8.
about 8.
I'm just
I'm
cooling,
just
man.
cooling,
I'm
man.
just
I'm
chilling.
just chilling.
I'm just
I'm just
trading.
trading.
I'm just
I'm
trading.
just trading.
Now these
Now
hit.
these hit.
Flaming hot
Flaming hot
limon.
limon.
So those are my
So
favorite
those are my
hot
favorite
Cheetos.
hot Cheetos.
The hot lemon
Hot
ones.
lemon ones.
You put them on some
Put them on some
sunflower
sunflower
seeds.
seeds.
You got me.
You got me.
You got me.
You got
I
me. I
need a sponsorship deal. Spits.
Spit.
Just send me
Just
packs
send
of
me packs
those,
of those,
and I'll
and
rap.
I'll rap.
Look, here go a
Look, here
good.
go
Like I
good.
said,
Like
here
I
go
said,
a
here go
possible good opportunity right now coming
now
in.
coming in.
I'm satisfied
I'm
with what I
satisfied with
got.
what I got.
I'm risk
I'm
free. I
risk
could
free. I
go
could
ahead and
go
enter
ahead
into
and
this
enter into
position
this
or look to
position or
enter in
look to
this
enter in this
position, but
position, but
I like what I
I
got
like
so
what I
far
got
this
so
week.
far this
There's
week.
no
There's no
possible way I
possible
can
way I
lose
can
any
lose
money
any
right now.
money
If I
right
enter
now.
in
If
this
I enter in
position,
this
it
position,
opens
it
me up to
opens me up
risk,
to
which
risk,
isn't
which isn't
bad. Still to
bad.
have
Still to have
one
one
unit of
unit
risk
of risk
open on this
on
one
this
trade I
one
did
trade I
down to
did
this
down to
area.
this area.
But since I'm
But
already
since I'm
risk
already
free on
risk
both
free on
now,
both now,
clearly risk
clearly
free, and
risk
we're
free
about 60 pips away from where I want the
from where I
market to
want the
go.
market to go.
I'm not gonna
I'm not
risk
gonna
it. I'm
risk
not
it.
gonna
I'm
push
not
the
gonna push the
envelope. I'm not gonna
envelope. I'm not
force
gonna
the
force the
trade,
trade,
even though it is
even though it is setting up
pretty
pretty
nicely.
nicely.
Like I said, we
Like I
have
said, we
previous
have previous
structure support in this
support in
area
this area
that should now
that
act
should
as
now act as
resistance, and we
resistance,
could
and
see
we
the
could see the
continuation to the
continuation to the
downside. So after
downside.
this
So after this
15-minute candle
15-minute candle
close,
close,
is it gonna
is it
close
going to close
bearish? We got
bearish?
30
We got 30
seconds.
seconds.
We got a good
We got a
30
good 30
seconds.
seconds.
What you want
What you
to do?
want to do?
What you want
What
to
you
do?
want to do?
What's it gonna
What's it
be?
gonna
Euro
be? Euro
USD.
USD.
Nice.
Nice.
A nice little
Nice
bearish
little
candle
bearish
close,
candle
rejecting
close,
the
rejecting
area.
the area.
I like it. I
I
like
like it.
it.
I like it.
I like it.
I like it.
I like it.
I
I
like
like
it.
it.
I
I
like
like
it.
it
I
a
like it
lot.
a lot.
I like it
I
a
like it
lot.
a lot.
Or should I stay
Or
on
should I
here
stay
until
on here
take
until
profit
take
is hit?
profit
That
is
might
hit?
not
That
come
might
till
not come
maybe
till
like
maybe like
11.
11.
I don't know if I
I
could
don't
be
know if
on
I
here
could be
for
on here for
5, 6,
5,
7,
6,
8
7, 8
hours.
hours.
We still gotta do
We still
another
got to do
live
another live
stream in
stream
between
in between
5:30 and
5:30 and
6:30, which will
6:30,
probably
which
be
will
about
probably be
another
about another
30
30
minutes.
minutes.
Really probably just
Really
gonna talk
probably just going
about
to talk
the
about the
dollar,
dollar,
United States
United
dollar,
States dollar,
some
some
Bitcoin,
Bitcoin,
commodities.
commodities.
What's y'all's
What's
pairs
y'all's
doing,
pairs
man?
doing, man?
It's so funny
It's
to
so
say
funny
I
to say
trade
I
certain
trade certain
pairs.
pairs.
I trade
I
all of
trade
these,
all of
bro.
these, bro.
USD,
USD,
CNH.
CNH.
Take a look
Take
at
a look at
Bitcoin.
Bitcoin.
What have we
What
been
have we
saying?
been saying?
Previous structure
Previous structure
resistance.
resistance. Like I said,
Go back, look
go
at the
back, look
past
at the
live
past live
streams.
streams.
From
From
5:30 to
5:30 to
6:30. What up,
6:30. What up,
Jay Money,
Jay
my boy
Money, my
Jay
boy
Staff. I
Jay
done
Staff.
spoke
I done
about you a
spoke
few
about you a
times
few
in
times in
this live
this
stream
live
too.
stream too.
You good,
You
bro?
good, bro?
Pretty soon
Pretty
YouTube will
soon YouTube will
realize
realize
that I'm
that
consistent, I'm
I'm
dedicated, and it's gonna
dedicated, and it's
start
gonna start
notifying y'all as soon
notifying
as I
y'all as
go
soon as I go
live.
live.
Got an
Got an echo.
Thank you for
Thank you for letting me know.
What's echoing?
What's echoing?
My voice or the
voice
music?
or the music?
What about now?
What about now?
It's still echoing.
It's still echoing.
It is still
It
echoing.
is still echoing.
Nah, I ain't using that.
I ain't using nothing. You're.
All right, so what if I do this? Can you hear the echo now? All right, bet. Appreciate you, my boy. All right, bet. Music got a good little volume to it. Appreciate you, J Money, J Staff. But yeah, I have spoke about you a few times. We went over this AUD USD trade you took yesterday. Really, really proud of you. That was a nice find. You did it all on your own. You spotted the setup. You knew we were bearish for the day. We've been bearish for a long time, just looking at the monthly time frame, pushing to the downside. Weekly time frame pushing to the downside as well. Daily time frame was pushing to the downside. So we're down here below all these lows, making moves to the downside. Was this that sell-off that happened right around COVID? I think so. Yep. So we starting to approach those levels. No real support from what we had saw. We did have some support, but it doesn't mean that it's going to hold. We've been making lower lows and lower highs on this market for a while. Lower low, lower high, lower low, lower high, lower low, lower high. Only thing next logical to expect, not that we anticipate or jump into trades hoping that they're going to play out the way that we do, but just the way the market structure moves. We were pushing to the downside on the 4 hour as well. So really, really nice job, Jordan. Really, really nice job. We were starting to push down on the 4 hour as well. And then on the hour, you can see that we were pushing to the downside, breaking structure. We had a nice pattern here, just putting everything all together, confluences all together. You saw we had a nice pattern here, which is inverted, or a head and shoulders, pattern, is setting you up for a move to the downside. You have an impulse up and an impulse down. And after an impulse, you expect a retracement, just continue the trend. Exactly what we got, or what you got, You're the one that did it. I don't want to take any credit from you. You found it. You just simply asked if it was a good opportunity. I said it looks perfect. I was looking at Euro USD. Same type of situation, same type of setup. Looking for the retracement to come back and retest some areas. And you went ahead and took yours. Got in at a good area. Price slid on down to the downside. Hit and take profit in about 3 or 4 hours. A nice 3-4 hour trade. Really, really good job, Jordan. Really, really good job. And that is an example of what is in the program as well. But now we're starting to make moves to the upside. It was a possible position right here on Euro USD. I didn't take it. Spoke about it. Setting up nicely. It's the reason why I didn't take it. I'm already sitting risk-free with the possible 8R or 8 plus R possible take profit. Even though I could look for an opportunity here. It would only put me at one open risk on this whole trade setup, whole trade idea, which is exactly what you want. You don't want to have 3 trades all running where you could lose all 3 trades and lose one on each. You want to make sure that anytime you open a new trade with the same trade idea, so I still have an idea that the market wants to come down and reach this area, I only want to lose 1 R if that doesn't play out. So if all this doesn't play out, I either want to lose nothing, get stopped out at break even, which is what I'm sitting at, or I go ahead and hit take profit. So I don't really want to lose 1 R right now because I'm so risk free. Price is already down here amongst the lows. It could easily be a quick spike, looking at about 60 something pips, but this could be a possible opportunity. I mean, I could see this coming back, breaking some structure, retesting this area, and then making a move to the downside to hit take profit. But who knows? Could get stopped out, break even. Ooh. But we can go back to BTC USD. We just chilling. You good? Euro CHF and USD CHF. I got you. Take a look at Euro CHF. Pushing to the downside quite aggressively. Like I said, I can't just hop straight on the chart on the 15 and then find opportunities. I've done it so many times that I've realized that those trades don't end up playing out. I've lost so many on just jumping onto the chart and being like, oh, this looks like a good trade right now. It wasn't. But monthly pushing down on Euro CHF. Weekly pushing down on Euro CHF, breaking below some structure as well. Daily is starting to push down as well. Had a little bit of manipulation in this area, consolidation. Market didn't really know what it wanted to do. Rejected some of these lows on Monday. Now we're starting to make our way down. On the 4-hour, we're breaking and creating structure, so we do have some structure support that should act as resistance if it does want to come back and retest this area. It also lines up if we extend it out over in here as well. So nothing that I can see to look for as far as swing trading. We probably would have missed our entry. It would have probably been somewhere around in here. Looking for a move probably like down here, honestly. Try to get a 3R out of it if we're swing trading. So we would have already been able to go risk-free, and we can no longer be looking for the setup because we started to make moves to the downside now. But we could drop to the 1-hour time frame and see that if we do get the retracement, same thing, back into this area, could look for a possible continuation to the downside. So that would be my play for the day on Euro CHF. Depends. As long as we get the retracement before we come and retest some of these lows down in here, I could see that possible setup. So that's Euro CHF. Still want to see the continuation to the downside until shown otherwise. So we are just continuing to make and break structure. And then I think USD CHF as well. Look at it on the monthly. If you paid attention to the live streams, I don't just mean you, Jordan, but anybody else watching as well. The most common pattern in the market: break above structure, come back for a retracement, retest previous structure, resistance, now broken or now acted as support and broken to the upside. You just want to see the continuation for a higher high to be created. The most common pattern in the market. And since we're getting this pattern on the monthly time frame, we can probably be bullish for a little while now. Spoke about it on the live streams. Once again, we have this weekly W formation. And this formation is a formation that completes 80 to 90% of the time, regardless of the time frame, regardless of the time. And then we got exactly that. The price moved back down, completed at the neckline. And then from there, we're in a good situation for the market to continue in trend. So now we've had an impulse, a retracement. The most common pattern in the market would be a higher high, which is exactly what we've got and gotten that created. And since we are breaking above some structure now, we want to look for the higher high to be created as well. If we do drop down to the daily time frame, you can see that we're getting even more to the same thing over and over and over. The most common pattern in the market. Come back, higher high, higher low, higher high. But as we are moving to the downside right now with the retracement on USD CHF, we don't want to look for any buy positions just yet. 4-hour time frame, we are starting to get the rejection up in these areas. So we got a double top forming. We know after a double top, or you should know that after a double top, which is a bearish pattern, you want to see a move to the downside, breaking the neckline. And after we get this, we could see a possible move back to the upside, which is going to be an M formation, M pattern, the opposite of the W formation, which completes 80 to 90% of the time. You want to see it completed at the neckline, which could give us the momentum and push we need to see the higher high created. So right now, just being patient on USD CHF. We are making moves, but we're coming into some levels here. Now, if we do start to get the break below today and a retracement, we could look for a possible move to the downside to go ahead and coincide with the confluences that we have. I think my headphones just died. So we could see possible moves to the downside, which would put us in short-term bearishness, which is exactly what we're expecting, short-term bearishness, before we start to see the market change over and then start to make moves to the upside for the higher high to be created. So really on Euro CHF and USD CHF, waiting for a retracement back into this area or some sort of retracement. For the strategies that we use, Jordan, it's just being patient. That's all trading really is. Could set some limits, set some alerts. I mean, set an alert down below here so you know if the market breaks. Could set another alert to wait for the retracement. But either way, just being patient on those. We got the 8:30. That news is coming out. My position is starting to retrace. Or we finally starting to make our way to the downside. We did get a spike up. US trades good balance actual minus 87.3 billion. So I don't know what that was looking for, what we were looking for on that. But we did get the, oh, so it's actually better. We were expected to be, oh, that was previous. Previously, we were at 90, negative 90 billion. We expected around 88, negative 88.9 billion. We got a positive 87, negative 0.3 billion. Okay, so we're negative, but we're better negative. It's a betterer negative. So that good should be positive for the United States dollar, right? Our position should start to see that news come into effect, hopefully. Like I said, previous structure resistance, it broke into the downside. Well, once broken to the downside, acted as, or excuse me, previous structure support, broken to the downside, retested as resistance. We did reject, but then we finally broke to the upside. Price should come back, retest that area from there. Either it will respect that area, start to make moves to the upside, or it will disrespect that area, and then we'll have another area of confluence for the market to start making moves to the downside, if that's what it wants to do. It doesn't really look like it right now, so it is what it is. What up? What up? Damn, I went over Euro CHF and USD CHF. I didn't know if you were leaving right that moment, but just scroll back a little bit. Basically, just being patient on Euro CHF and dollar Swiss as well. So, I mean, just monthly pushing to the downside, daily pushing to the downside, weekly pushing to the downside. We did have a possible area that we could have been into this market for a move to the downside, possibly, but we would already be risk-free, so we could no longer be looking for the opportunity anyway. But as we move forward, not the swing trading opportunity as it is, but moving forward, we could expect a lower low. But if we drop down to the hourly time frame, you can see we are breaking structure on the hourly time frame. We broke some structure support. If we get some sort of retracement before we come down and reject from these lows, we then could possibly look for a continuation to the downside for a lower low of the overall structure to be created. If we come down into this area and get rejected, then the probabilities of the setup diminish slightly. They fall just a little bit, just because we would have rejected not only once but twice this area. So the probabilities of it breaking through aren't as high as if we did not retest it a second time and reject. So that could still be a play, but most off still got to wait for the retracement. We still put our constraints in the market before we trade, and we need to see our rules satisfied first. Then if we go over USD CHF, some of the same things, monthly pushing to the upside. This is a monthly TMCP, monthly, the most common pattern in the market. So it is the most powerful, and it gives you a lot of information on the direction. So we've had a break above structure, come back, retest previous structure resistance, now being used as support. You just want to see a higher high created. So if we know we're supposed to make a higher high on the monthly time frame, we can drop down to the weekly. We see we had a weekly W formation, which I just want to reiterate puts us in the same confluence as what we want to see. We want to see the market structure on our side, and then as well a lot of the most common pattern in the market. So we did make a higher high, come and reach these areas, hit take profit, and we are starting to get the effects of the exhaustion right now before we start to grab some more liquidity to make a move to the upside to get some more strength. So that is on the weekly. We had that W formation complete 80 to 90% of the time. Just the most common pattern in the market. We have move up, move down, higher high created. We can expect a higher low for a higher high to be created. And since we are making moves to the downside right now, I do want to point out 80 to 90% completion rate on all time frames. Doesn't matter. Come back, retest the neckline, and complete at the neckline. Once it gets completed, that is the pattern completed. But if we look at the 4-hour time frame, we're making moves to the downside. We want to look for buy opportunities for the long term. That's where the market is heading, to the upside. We know that from the monthly time frame as well. But keeping that in the back of our mind as we go through these time frames, we have previous structure resistance on the 4-hour. We have an M formation, which we know is a bearish formation. We have price coming up, getting rejected from these highs. We want to see the neckline broken to the downside. Once we get the neckline broken to the downside, that could be on a higher time frame the retracement that we needed to see the market make a move to the upside. And then not only that, we have an M formation, which we want to see the pattern completed at the neckline, which could further propel us to create the higher high of the overall structure that we are seeing from the monthly time frame. So as it is right now on the 4-hour, if we're pushing to the downside, we'd like to see that neckline broken. If we drop down to the hour time frame, you can see that we've had previous structure support right in this area, that if we do get this area broken to the downside with a nice impulse and our correct retracement, we could look for a continuation to the downside, because now on these lower time frames, this could line up with the confluence of a lower high, or a lower low, a higher low. This could give us the confluence of a higher low from our higher time frames that we want to see the move to the upside. So everything's really lining up. We could possibly see this move for the higher high move to be created, but it's still just patience. It's all just patience and waiting. This is a waiting game, patience game. That's all we're really doing. That's why I'm on this live stream now, because all I'm doing is waiting. I'm not really trading too much. Dang! We're only down 10% now. We was down 30%. 7%. No! 8% on the day. Oh yeah, you love to see it. But for the most part, just being patient, man. This is about the time where the moves are actually happening in the market. So the opportunity to get in is more than likely already passed. There may be a possible setup later on, but New York session just opened up. London session's in full effect. We got a lot of volatility, a lot of players in the market, a lot of liquidity right now. So it may not provide any possible opportunities as people are getting their profits met, are getting some profits and taking their profits right now. I wish that was me. Only down about 5% on the day. No. We got another level of structure right in here. We still got 20 minutes though for this candle closes. The hourly candle, we could see a move back to the downside. What pattern do you see right here? Starting to form. We have a move up, move down, move up. We could see a continuation to the upside, the most common pattern in the market. But if the market starts to reject from these areas, we could possibly get exactly what we want. Putting everything together, using what we know, we could see a M formation, double top formation. You know, once you get the double top, you want to see the neckline broke. If we get a neckline break, that'll be 30 pips away from take profit. So it could be really, really close. I just want a little spike. Just a little spike. Just a little bit of spike. I'll take this off so nobody gets confused, but just know we could have a possible move to the downside if the market wants to give it to me. Once again, put your rules or your constraints or the things that you want to see in the market. GBP CAD, no, we ain't seen GBP CAD yet, but you want to put your rules in place before you take the trade, not afterwards. A lot of people realize their rules afterwards, and then by then it's already too late. But all these pairs are starting to make some sort of retracements now, which we had a lot of movement overnight. But on the monthly, GBP CAD pushing to the downside in territories I don't think we've ever been before. So yeah, I mean, if we just look at it overall, GBP CAD since the beginning has started with the higher high. Yeah, of course, because that's where we started with in 2004 on this market. But since then, we've just been making lower lows and lower highs. Lower lows, lower high, lower low, lower high, lower low, little consolidation. We did change some hands, momentum for a little bit, started the retracement, the exhaustion. And then we got the double top. We got the neckline break of the M formation. We had what we wanted to see, the market come back, but we did have a strong left shoulder right in this area. Market did not come all the way back to reach the neckline. And then from there, we've just been making lower lows and lower highs as well. Yeah, and some deep, deep waters. If I was there, I'd be dead because I can't swim. I'd have been dead. And then we're starting to get the rollover now, where we've had this extreme movement to the downside. Take that off the chart. We've had this extreme bearishness to the downside. Who knows how long it's going to be, how long it's going to last. It's not up to me to decide. I'm not going to try to decide that either. But what I do know is that since we've been moving to the downside quite aggressively for so long, and we are still below some structure on the weekly as well, could be coming back for a retracement to tap. But if we move to the daily time frame, you can see that we did try to retrace to that area. We did not get the retracement back into what we wanted to see, previous structure support, now turned resistance. And we're starting to make moves to the downside. So just take it for what it is. Since we're making lower lows and lower highs, just expect lower lows and lower highs. This 4-hour candle looks pretty nice. for a continuation to the downside as well. But if we look at the hour time frame, we did have an impulse to the downside right here, but price has come back and closed above not only the initiation but the 786 as well. And then we started to consolidate here. We did try to make a higher high, which was shown by the failure to break lower than this area. But then once we got rejected, a little manipulation in here, we started to make moves to the downside, breaking structure, which is setting up quite nicely for the strategy that we use. We could possibly see something in here, as well as, let's see what lines up. With all this rejection though, it's at least a 382, so that's pretty nice. 382 could possibly start to see the rejection from this area. Once you get some structure broken as well, could really start to see this area being used for a continuation to the downside. So, I mean, it's one to look out for. It's one to watch for. If we get a proper retracement, it could see the continuation to the downside as well, just continuing trend. And then, I mean, you could have your normal TMCP2 take profit probably somewhere right around here, really. But I mean, you could go big or go home one time and really get a nice take profit target met for somewhere down in here. I was almost correct, almost right on it. I be trying to guess and make sure I get my eyes right. But yeah, you could see this really fall if it falls all the way down here. But, you know, patience. But yeah, that's GBP CAD. I just want to see the continuation to the downside. This could be a possible day trade opportunity if it does set up. So we still need to see the retracement end. Just because the retracement comes to this area doesn't mean we just blindly hop in, because the market could disrespect this area and not respect it at all. And then you just left holding the bag as the market never even comes back, then goes on, hit stop you out, then come here, then do something like that, and then finally give you the opportunity to get in right here. For us, we be waiting on that, but a lot of other people don't get trapped. So my Euro USD position doing? No, 5% tint, so you can't see off in my window. See, I'm not liking this. But hey, this is a real life example. I can't do anything. I can't make the market go down. I can't make the market go up. All thing I can do is put myself in the best position for the trade to play out. And I've done that. I've managed my risk. I've protected my capital. And I've put myself in a good situation, a good opportunity to win the trade. So I've gotten in at the highs. You want to sell high, buy low relative to where you are. So we were in this structure area here relative to where we were in the structure area here. If this was the high of the structure area, I got in amongst the highs. If this was the lows, I don't want to be selling down here amongst the lows. That's one of the other reasons as to why I didn't just blindly hop into that position earlier as well that I called out. It's because we are down here amongst the lows. It's easily to get rejected, and now we're in a double bottom situation where price explodes to the upside. But what I can do is make sure I have a nice risk to reward. I go risk free when it makes sense. I have a nice logical take profit and a logical stop loss. So it gives me a good risk to reward as well. And then from there, I just let the market do what the market does. I've done this multiple times, so I'm okay with letting the market come back and stop me out, break even. I'm also okay with letting the market go on to hit take profit and paying me. Why is this a manipulation candle? Thank you. Been waiting on that for about an hour now. So we've had manipulation candles all on Euro and GBP as well. I spoke about GBP, USD. We'd be heated because this would have probably been the position. Something set up like this, a setup somewhere around in here. And we would have been riding this risk-free, and then price would have came, tapped us out, and been running in our favor. But this candle here, why is this a manipulation candle? Let me go back. So why is this a manipulation candle, you ask? Let me give it to you. This is a manipulation candle because if we look at what the structure has been doing. Now, you've heard of stop hunts, and just because you get stopped out doesn't mean it's a stop hunt. Once you learn structure and you get like me and you, Jordan. So once you get into the program and actually learn structure and how the market's supposed to move, everything works accordingly. So we know that if the market wants to move to the downside, we need to make lower lows and lower highs. Lower low, lower high, lower low, lower high, lower low, technically lower high, lower low, lower high, lower low, lower high, lower low, lower high. Expected to make a lower low. It's where we got rejected. That's what's happening in the market now. And then we came up and we not only broke above this high, so we spiked above it, stopping out everybody that got in right here with their stop loss above there, stopping them out. But we also spiked above this level here, which if we're making moves to the downside, we don't want to see that. That's not how the market is supposed to behave. So the market does have a certain way that it's supposed to move around and behave, and we're not supposed to break above previous structure if we're making moves to the downside. So just like GBP USD, which is a little more prevalent, a little more easier to point out, is hey, we're not supposed to come retest these highs. If we look at what happened yesterday, the opportunities to get in the market were somewhere right around in here yesterday. So if you got in anywhere in this area yesterday, you were riding with pretty good profit. Price probably in your favor, you're probably risk-free. And then what happens is the market comes back, not only breaks this level of structure, but also breaks multiple levels of structure, not closing above them, but just tapping above them, and then continuing back into trend. That is a manipulation candle. That is the price coming to stop hunt all these traders. If you're risk-free, or if you're break even, or if you still have open risk. It just wants to come up, liquidity grab real quick, and then continue trend. So this is a manipulation candle because it continued the market structure. It went up, spiked, it did sporadic things, so it did uncharacteristic things that the market is not supposed to do, and then continued to do what it's exactly supposed to do. So just simply put, if we're going to move to the upside, we expect higher highs and higher lows. We do not expect the market to make a lower low and then make a higher high. That is market manipulation. That is stop hunting. Same way on the downside. If we're making lower lows and lower highs, lower lows and lower highs, we do not expect the market to make a higher high and then as well make a lower low. It happens, obviously. We had a higher high here, multiple higher highs, and then we came down and made a lower low. That is market manipulation at its finest. That is market manipulation 101. That is stop hunting. A lot of people think just because they got stopped out, that's stop hunting them. No, sometimes you're just in a bad position. So like this is not necessarily a stop hunt because we were making lower lows and lower highs, but the market changed over. Now we're creating higher highs and higher lows. So it's not uncharacteristic for this market to break above these highs and then come back in, consolidate a little bit, start to make higher highs, consolidation really, and now we're making lower lows and lower highs. That's just normal market structure. That's the way the market's supposed to work. We make an impulse to the downside, come back for some retracement, we show a change of hands, a little momentum switch, and then we start to continue trend. That is how the market works. So this is not a stop hunt. You just got into a bad trade. The market didn't spike above the hunt your stop in this instance if you were to be shorting from over here. So say you had a imbalance which that really doesn't mean much. Say you went here and you wanted to put your stop above the supply demand candle, or what do y'all like to, I don't even know how it goes, so I'm trying to insult people and don't even know how they do it. With a stop above your supply and demand candle, and then you're looking for price to come down and retest these lower these previous lower lows. We know there's a better way to go ahead and trade this to where we can get a better risk to reward, and as well have a better confluence and probabilities on our side, Jordan. But just for the sake of argument, thanks for asking. Somebody may have their entry here. Now the market spiked into their entry, went on to stop them out, and then continued and to be in what looks like a trade that's going to hit take profit for them, for whatever the situation. This is not a stop hunt. The market didn't stop hunt you out. You just went in too early. You just got in for a sale when the market was making higher highs and higher lows. That's not a stop hunt. That's just bad trading. Now, if you wait for the market to make lower lows and lower highs, if the market was making lower lows and lower highs, I'm glad you understand. But if you start to wait to get in when the market is making, okay, equal low, come back, lower high. Now we have some structure in here as well. But now we broke some structure to the downside. And now I have a lower low relative to right in here. And then you look for a position to the downside. And you had your stop up in here, above the highs protected. You're looking for a lower low to be created, even if it was just this little section here. There'd be no way to get a 1 to 2, so we'd have to go for the big boy. But just say you're looking for a nice 1 to 4. Continue into the downside. And now you're entered in with the market trend. So you entered for a sale when the market is making lower lows and lower highs, which is exactly what you expect to happen. And then the market does continue trend. And then right here, we get a big spike, which we're risk-free, or some other people may not be risk-free, but open risk or whatever happens. The market comes in all the way up here to try to stop you out, and doesn't close up here, close and break above structure for it to show us a change in structure, but instead the market disrespects the trend, makes a higher high, and then as well makes a lower low. That is market manipulation. So it happens, it sucks. But hey, Euro USD making a move to the downside now. I see there's another 1 in front of that number. It was at 5. We was at negative 5% on the day. Now I see we at negative 15%. That's what I like to see. There we go. But yeah. I have 0.05. You right. My fault. 0.05. You right. Shit. Wasn't even 5%. But yeah, that's market manipulation in a nutshell. When you see that, now you understand what has happened. It was because of the news. There was speaking going on at that time, I do believe. I don't know if he was still speaking at that time, but there was a speaking event that went on right around this time where a lot of the GBP pairs had a spike. GBP JPY, that was another one. Not that I'm in these trades, I'm just saying that this is probably where we would look for an opportunity, and to be riding this trade risk-free for it to go ahead and spike back up to only come back and continue trend is tragic. It's very tragic, but it happens. But once you know what it is, the knowledge, remember we were talking about earlier in the stream, once you know the rules, it makes everything else easier. So now you're not trying to look for a stupid re-entry, or now you're not switching your bias because this candle didn't close yet, it just spiked up. Say you happen to be looking at the market, you're in a sell position, price spiked up, you close out your sell position and now turn into a buy position, and the market comes back down here. Now you understand, like, hey, not any normal viewer. I'm talking to you, Jordan, but now you understand, like, hey, I got stopped out, break even. All right, why? What's going on? Let me analyze this. Is the market turning around? Is it switching its bias? Is it starting to become bullish now? Or was this manipulation? Did I just get stopped out? Is it one of those things that just happens? It's just one of those things that happens. Not that we were entered into this trade, but manipulation like this, it's just one of those things that just happens. GBP, all of them, all the GBP pairs had a nice little, well, this one wasn't really manipulation. This was actually the start of what we'd like to see move to the downside after this big sell-off. So once again, most common pattern in the market. Yeah, that is tough. That's the revenge trading that people don't really speak about. Like, yeah, revenge trading is bad if you don't know why you lost. But sometimes we lose one position and then the market sets up with another opportunity for us to take the trade in the same way and ends up going on to be a winner. So it's revenge trading, but we understood that. Yep. And then we understand that, hey, this is the reason why. Let me not just immediately jump back into the trade. I lost this trade, or I was stopped out, break even. Let me see, or let me find another structure area for the market to come into for me to look for another opportunity. It's just opportunities. There will always be another trade. Calculated re-entry, of course. But on GBP NZD, we had a move to the downside. Even on this day, we spiked all the way down here, which is crazy. Then we're starting to make a retracement back up in here. We did come all the way up, but we rejected from there. And now we are in the most common pattern in the market, and that is on the monthly time frame of GBP NZD, one of the most volatile pairs, if not the most volatile pair in the Forex market. So if we know we're expecting a lower low to be created, then yeah, you could really take advantage of that. But we do have some support all in here. That's what we got rejected from. And I think it was GB Euro CHF maybe. I was just speaking about it. When we come into these areas of support, you want to see the retracement come back for some liquidity to be able to break through that zone. So if we came out of this area and we just started to make moves to the upside, then yeah, we're not looking for possible sell opportunities because we're breaking structure. But since 9, 5, and 1, I got my alarm set. But since we came back for a retracement and rejected at previous structure, turn support, an M formation, a pattern that completes 80 to 90% of the time. Move up, move down, move up, move down. I mean, even if you want to say it moved all the way down here, you still want to see it come complete at the neckline. Imagine if you knew the things that I teach, you could take advantage of this knowledge on the monthly time frame and use it to your advantage on lower time frames. So we're talking about, let me draw that over. M formation, you want to see it come complete at the neckline, which is an 80 to 90 completion rate pattern on all time frames. We've done one on the monthly USD CHF, on the weekly. I don't know which one I pointed out, GBP JPY, GBP USD, one of them. And on the daily, I know there was one on GBP USD of an M formation. These are completing on all those time frames. I think I pulled out one on the 4-hour as well. Pay attention to that. But now that we've had this pattern completed, we came back for a retracement, retesting previous structure support that should now act as resistance, which is exactly what we'd like to see. We tested that with this spike, with that news that came out, and then from there it put us in a good trend. So now we were impulse, retracement, just want to see the next impulse to the downside. The reason it completes 80 to 90% of the time is because it makes sense. Look at how well that works with structure. If I tell you that this is the most common pattern in the market, and then I tell you that this pattern completes at the neckline, what would you be thinking? Or what should you be thinking? Or putting 2 and 2 together. Like, hey, if I see this, this is how I learn. Hey, this is the most common pattern in the market. And the way the most common pattern in the market works is you break structure, retest structure, break structure, retest structure. If I broke structure to the downside and I had this pattern, where do I want to come back to? Previous structure. Where is previous structure? The neckline. If I know that information, if I come back and retest previous structure, I'm expected to break structure, to come back to retest structure, to break structure. Then it all lines up. That's why it makes sense. That's why it's truth. Continuation, yes. That's the way the market moves. It doesn't matter on all time frames. We're moving to the downside, we have to make a lower low, come back for a retracement to make a lower low. If we're moving to the upside, we have to make a higher high to come back for a retracement to make a higher high. It's the way the market moves. And if you know that, then you can take that knowledge from that time frame. So on the daily, if I know, or on the monthly, if I know we're in the most common pattern in the market, we have a move to the downside, a retracement, and now we are currently pushing to the downside, which we've already completed. This pattern has already completed. The most common pattern in the market has already completed, almost hitting the second take profit as well. Powerful. This is powerful. On the monthly, think if you knew on the monthly, right here, that you were expecting the market to come here. Just with this sole information. Now, this isn't how I want you to trade. This isn't the professional way to trade. This isn't how you should be taught to trade. But just think, if you knew that on the monthly, the market was it should make a move all the way down to this area. You could drop down on the 15-minute time frame. Now, so much information, I can't even zoom in or scroll in. But just say you went off of bada bing, bada boom. We know the market's supposed to make a move to the downside. We've been rejecting this area multiple times. We broke structure to the downside, broke and created structure to the downside. Let's see if we get a retest of here. And you just said, simply gonna put my stop loss above that area, and I'm gonna target this 100 pip move, or 900 and almost 950 pips. I'm gonna look for 950 pips on this move to the downside. Now, I don't know if we get triggered, but we got triggered. All right, we got triggered, and we know that we want to see the market continue to the downside on the monthly time frame. On the monthly, just on the monthly, we know where the market is supposed to go. And we're on the 15-minute. I don't recommend this. This is not how I trade. This is not how I teach you to trade. Damn, looking at my Euro USD position, we back down to 0.5% down. Oh no, what are we doing? But yeah, we triggered in on the 15-minute. This is an 81 pip stop loss as well. Bada bing, bada boom, market starts to make a move to the downside. Simply put, what the heck? That's how far back it was. Simply put, oh, we would have got stopped out. Say you went a 1 to 5. We don't get stopped out on a 1 to 5. Of course, like I said, just for the example, you could have gotten 950 pips. Just because you knew the market was supposed to go to this area. Now, you've been into this thing a long time, but eventually, the market would have hit. I can't even put it all on one screen. Okay. Eventually, the market would have hit. So, yeah, that's how powerful the higher time frames are over the lower time frames. Yeah, we had a whole bunch of change of structure in here. Market moving around, doing different things, coming back to retest certain areas, just making moves. But eventually, the market made the move to the downside that is expected from the higher time frame. So the higher time frame triumphs the lower time frames. And just with that knowledge of knowing, hey, this pattern is supposed to complete like this, or this pattern is supposed to do this, you can prepare yourself in that direction. That's what we do. That's what we do, man. That's really it. That's all I want to really say is that what we do. I call out a lot of the things, a lot of the moves that I want to see happen before they happen. And they tend to happen. And then people think I don't know what I'm talking about. I still got to go back to my Euro USD. I had a target down here for a while. So when I started doing the live streams about a month ago, 3 weeks ago, let's see. Price was right around this area. I said, hey, man. Actually, I think it was like this. I said, hey, man, first off, we want to see this 80 to 90 completion rate pattern complete. Move up, move down, move up, move down. Break below structure. This is the double top in formation. We break below the neckline. What is expected from there? What is expected from there? A retest of the neckline. We want to see that retested and completed. And then from there, it puts us in the most common pattern in the market, which is perfect to go ahead and have this take profit or this target hit. And this was weeks ahead. This was weeks. We caught out this move to the upside, caught out the move to the downside. What happened? Just because of the higher time frames, I know exactly not exactly, but I know the direction the market is supposed to go. Just from the higher time frames. So if I know that, I can look for an opportunity to come complete at the neckline, for the market to complete at the neckline, and then from there, what do we get? We get exactly what we want to see. The most common pattern in the market. Move to the downside, come back, retest previous structure support, now turn resistance, and you want to see a continuation for a lower low. So you jumping in straight in on GCAD. But yeah, had that target set out for a while, and guess what? Bada bing, bada boom, joint was smashed. Of course, it was the news. And like I said, news completes the move. There was some news that came out. News completes the move. Remember that, remember that, remember that. If you're in the right direction, if you know how to look at these patterns and know where the market's going, then when you get in for the move to the downside, you'll be like, wow, what happened? The news come out that pushed oh, it did. Thanks, news. But let's see what GBP CAD look like. GBP CAD. GBP CAD. Oh, back in the day, you jumping in right here. Now, I still want to see this area retested. And there's no structure for entry yet for us. You know, the way we do it. We get a move in here, move down, possible break up or something, move back down. Now we have something for us to go off of to go ahead and look for an entry to the downside. But being patient, just be patient. Just be patient. That's all we got. Now you know where the market's supposed to do and how it's supposed to act. It could make a move to the downside. And then we just be set up again, patiently waiting one more time. Then we be patiently waiting one more time. We can get in, still get a nice and easy risk to reward. 2 or greater. But honestly, we didn't even get the 382 touch. So we couldn't even get in if we wanted to. Shh, don't tell nobody that though. We ain't get none of our levels hit. That's in our rules. We gotta get one of these levels hit first, or else it's not a high probability for us. We just gambling in. Yes, sir. That growth. That growth. With an F. Groff. Groff. What is Euro USD doing, boy? I don't try to look at it because there's no point. I can't do anything. That's what I was getting at. There's nothing I can do. So just standing here, sitting here, looking at it, it doesn't do anything for me. I'm not going to close my position out early either. Like, I'm a disciplined trader with the strategies that I use and the rules that we have. So I can only just let the market do what it does. And me staring at it doesn't do it any good. But I can see these numbers on the side over here. And I'm like, what the heck? What the heck? What the heck? Hopefully we get this failed W formation. Boom. That'd be nice. Well, that was easy. But only thing I can do is put myself in a good position, which I am in. Let that mug ride out. You know how many times I was in a situation like this where, let's see what it looks like on the hour. I mean, technically, I have a level in the market here. Break down below. Not an immediate break back into the area. But it could be set up for that. But do you know how many times I've seen something like this where I'm like, well, I should probably just close now because I'm at this level of structure and it's not that bad. You know, I'm up probably like 2.5 R on one position, 1.7, so 1.2, somewhere around 1.8 R on one position. Oh, that's the same one. And about 1.9 on the other position. So yeah, I'm about 4 R up right now. Really good. Anything over a 2, especially since these were day trades. Since these were day trades, anything over a 2R is lovely. You know, you got to be willing to say, hey, price went in my favor. 3.6R, now that it's coming back to 2R, I can't be mad at taking profits at that. Yeah, cool, of course. But do you know how many times I've been in a situation where price has been struggling around this area, especially after we failed to make the push to the downside that you would like to see, and then the market start to show signs of a reversal, and I close out my position, and then as soon as I close out my position, and I'm risk-free. Keep that in mind too. I'll be risk-free on this. Like, oh, I'm risk-free. I just don't want to not get nothing. I just don't want to not get nothing. At least let me get something. And then the market do some weird, like, 1 hour candle spike down, and then the next hour spike into this area, and then start the reversal. And I'd be like, bruh, I just missed out on another 4%, 4R. Like, if I close out now, I get about 4R, 3 point something. Not bad for 2 positions. I mean, it is because risk 1% on each, but they're risk free, so not bad. But because I was so active in the market, or looking at the market, or wanting to just get some profits, or just antsy just because I'm sitting here, just want to be trading, doing something. I'm not trading if I'm not actively pressing buttons. It's kicked me in the butt. So now I'm like, look, I take my targets. I've had my target where I'm thinking in a situation, say like this, where it's like, bruh, it don't look good for your TP to get met. Like, it doesn't look like the market's going to reach your take profit. And this is on, of course, on lower time frames. We're on these smaller time frames, so You get a little more detail, but be like, bro, it doesn't look like it's gonna break all this structure and hit your take profit. I'd be like, all right, bet. I've had many take profits to where it's like, bruh, this price is almost pulled all the way back to stop me out and then spike into my favor. Matter of fact, I think it was a Euro USD trade that looked similar to something like this. Boom. Boom. Right here. So we had a Euro USD trade. Come back. Break below structure. Same thing. Come back. Retest our entry perfectly to the T. Start to make moves to the downside. Risk free. Risk free. Risk free. Now, when I tell you we was like a pip away, I tell you it was like a pip away. Like literally, you know how Euro USD be having zero spreads for some brokers, the most traded currency pair in the world. Like, bruh, this market, this pullback came so close to the entry. It was ridiculous. Now, it didn't stop me out on my broker. It was like literally a pipette away. But look at what happened. Spiked up. It was close, near to the take profit multiple times. You know what I'm saying? Like halfway down in here again, pulled back, started to make a move to the downside, and then started to get to this area, rejected these lows where it's like, I could have gotten a 2R out of it and been happy and da. But risk free. Price pulls back. I could have easily closed out. Like, let me just get something. Doesn't hit my entry. Doesn't stop me out at break even. And then the next candle moves all the way down. And then the candle after that, take profits hit for 203 pips. A nice 3.45 take profit. Like, I can't tell you the amount of times where it looks like price should come back, stop me out, or I could get a little bit, at least get something. Yeah, I know. It's just hilarious. Like, bro, that shit's happened so many times. And it's also happened to where, hey, price is making moves to the upside, comes back, stops me out, continues in my favor, but then doesn't play out. Like, yeah, I got stopped out. The reason I got stopped out is because the market doesn't want to go hit my take profit. Let me see. I got some that almost hit take profit and then come back and stop me out. Actually, there's one that happened not too long ago. Almost hit take profit and then came back and stopped me out. Oh, Euro GBP. But if we go to Euro GBP, that was happening all last week. All last week. Oh, that's the thing we removed. But look, we're looking for the move to the downside. Got the good entry, was able to go risk free. Price went about halfway to the take profit. And then guess what? Just came back, stopped me out. Barely. Like, man. All right, that's cool. Stopped out. Hey, gave me another opportunity to look for another entry to the same place. Same setup. Got in, triggered in, hit my entry, sniper entry, started to move, was able to go risk free. Price pulls back, stops me out, and then right before the news, explodes to the downside, hitting the take profit. So 2 opportunities where I could have gotten at least a 3R, didn't get either one of them, and the target was met. So it happens both ways. I should have been taken out on some trades and it ended up going hit and take profit, and then I have some that I'm taking out at break even that go on to hit take profit. It happens, but I've had it happen so much both ways, and a lot more take profits hit than break evens, that I'm all right with whatever happens. I'm all right. But seeing GBP make this move to the upside, though, makes me feel better about Euro GBP, but not Euro GBP moving to the upside. It did have a possible setup, but we wasn't looking for it anymore. Price started to make moves to the downside, breaking structure too much. another situation to where we would have been risk free though. What did that look like? Damn, a 1.5, 150 pips. Sometimes. But yeah, any questions, any more people in here in the chat doing anything, let me know. I'll pull out something, any pairs you want me to look at. Oh, that's what I was doing. We were looking at BTC USD as well. See what's happening over here. Like I said, the month is coming to an end. And the way that the monthly candle was on Monday is not the way the monthly candle is today. So we had previous structure, resistance, acting as support until broken through. We got that 18,000 level that is holding price. Yeah, 18,000 level is holding price right around in here. I want to see that level broken to the downside before starting to look for more sales. Price is kind of trapped in between this area. If we do get a break to the upside though, yeah, if we do get a kick to the upside, we could possibly see a continuation to the upside. Coming out of this previous structure, resistance, just want to now see it be used as support from the monthly time frame. We're breaking it down lower and lower and lower in time frames, using our knowledge, multi-time frame analysis, and structure the right way. So we've had a spike up, spike back down. That sets you up for an indication of a left shoulder here, head, right shoulder there, which does put you in a situation to see further continuation to the downside, but we're not anticipating. I'm not just placing a sell at my stop up here and then my target down here somewhere. We're not doing that. You gotta wait for it to actually show you signs of rejection, and then you get in. But we could possibly see a move to the upside as well coming out of this area. And then be patient, just waiting for the break, waiting for the market to confirm itself. And then that's when you look for a possible move to the upside. Now, once again, the halving event is not supposed to happen till 2024. 2024. On 2024, we could see the explosion to the upside that everybody wants to see. For some of these highs to come get retested once again. But until then, I could just see some market manipulation, some little moves to the upside, come back, little liquidity grabs, come complete at the neckline, make a move to the upside, and then we move along like that to make our way up, because 2024 is a whole nother year and a half and a quarter. But I did want to look at some of the indices. Indices is how it's said, not indices. But what y'all be looking at? What y'all be seeing on this stuff? Dang, most common pattern in the market once again. Imagine if you knew in January, February, March, April. Well, you wouldn't have known in April, but you would have known in August that the market wants to make a lower low. The market is headed towards these lows to make a lower low on the monthly, just on the monthly. Just from right here, what would you have? I know they're points and not pips, but about 2,800, 2,850 ticks to the downside. I don't know what that does for people who trade the indices, the indices, the outdices of the indices. But imagine if you knew that. If you knew that. I just don't see nothing that I could have taken advantage of. For real. I mean, not really. These moves to the downside are relentless. When it impulses, we impulsing, baby. I don't ever trade these, but when we're impulsing, we are impulsing. Ain't no looking back. Is that why people like to trade these pairs? Gold, take a look at gold. Let me run to the restroom real quick. I'm gonna go to the bathroom, and I'll be right back. been live for. I am enjoying this, honestly. Got on about 6, about 9:30. It's about 3.5 hours. This is gonna be a streamy day. 3:15, 3:17. Woo, gold pushing. What's going on? What's going on with you, gold? What's up with your boy? Let's get right to it, though. If we look at the monthly time frame, this monthly candle doesn't necessarily have to close below structure, so keep that in mind. But you know, the dollar is gaining some strength. It's been pretty strong over the last about week, but we are breaking below some structure. So on the weekly time frame, we are starting to get the retracement. We did have a dip down on the retracement. We've been anticipating a retracement of some sort that if does come, we are still below some structure. So just when I go through these, we're just looking at the direction. We're still bearish on gold on the weekly. On the monthly, below structure. On the weekly, we're below structure, pushing to the downside, even though we are starting to exhaust a little bit. Now, this is when it comes to your multi-time frame analysis. On the daily, we're still in a bearish market structure.
It's 9:30.
Thanks, Siri. We're still in a bearish market structure. If we're moving to the downside, how does the market have to move? Lower low, lower high, lower low, lower high. So even though we start to make a move back up, we start to retrace, exhaust, correct ourselves, pull back. That is necessary for the trend to continue, for us to still be bearish. So even though on the daily, you all will say, or some people will say, I don't like saying you all, I just do not think that this smart money concepts is a efficient way to trade. I think it's really causing a lot of people more heartache than what it needs to be. I essentially trade smart money concepts because I see that I'm taking the same trades that smart money traders take, but it's with a lot less stress and a lot more probabilities. Our entries are different, as well as like the way we enter and the time that we enter, but essentially the trades will be, you know, for the most part, same direction, looking for the same areas of some sort for the market to go to. So when I really try to like, I don't want to disrespect anybody, but it just doesn't make sense, some of the smart money concepts, the way they trade. So even though we are pulling back, exhausting, correcting ourselves, doing all this, it is necessary for us to see a continuation to the downside. And we are still below structure. So until this structure is broken, we react, we don't anticipate. React, don't anticipate. React, don't anticipate. You can't anticipate that the market's going to break this level and start to look for buys. Or even right here, start to look for buys. And start to say, oh, the market's going to come up here to fill this whatever imbalance and react to what the market is doing. Yes, it's pushing up, but we have a level of structure here that if broken, yes, I could see a continuation to the upside, but we haven't gotten the break yet. But back to it, what I was getting at is some people was going to say that this is a liquidity grab or spike to the downside or some, I don't know what it is. But I know that those are some of the trigger words they use, and that now we are making our way to the upside for a whole reversal and prices getting ready to hit 20,000 in gold and blah, 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 blah. That's not the truth. We're still bearish on the 4-hour time frame. Now, keep in mind, we just went through the monthly, weekly, and the daily, and we were bearish on all 3 of those time frames. On the 4-hour, yes, we're starting to break some structure. But we can't just look for buys just because the 4-hour is breaking structure to the upside. No, that is necessary, and this is exactly the market structure that you want to see on the retracement for the continuation to happen on the higher time frame. On the lower time frame, yes, it's going to be change of directions. It's going to look like a shift in the market. It's bullish, now it's bearish, now it's making moves to the upside, it's retracing, no, it's impulsing up, no, it's retracing up, no, it's impulsing down now. No, all this stuff is going to happen on lower time frames. But what have we been saying? Remember, if you know where the market is supposed to go, not anticipating but reacting, just having an idea in mind, we know that the market is supposed to make a lower low. So we can start to plan a trade around the market making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low. We can start to build a plan around that. So now, yes, when we drop down on lower time frames, we can see the 4 hour is making a move to the upside, breaking structure. Hey, the 1 hour is impulsing to the upside, breaking structure, making and creating structure. Hey, I don't expect this market to go ahead and break all of this structure, but there could be a possibility that if the market does impulse a little bit and come back for a little bit of a retracement, matching the rules of the strategies that we use, then I could see the confluence of a small day trade counter trending the day trade to the confluence level that I expect the retracement of the higher time frame to end at. So this area right here, previous structure support, that should now act as resistance on the higher time frame, on my daily, on my weekly, on my monthly. This area right in here, yeah, now it's starting to make sense that, hey, I could short-term day trade it up to this area. I don't want to take really too much more than this area, so I want to put my target here. And I don't really want to try to go for a home run because the market may not hit that area. I want to get my take profit met. And then I know after I'm finished with my buy position, I'm in a perfect situation from the higher time frames to see the impulse to the downside, which is the intended direction that the market wants to go, which is where we, over here at the FX Savant University, we will swing trade this mug back down to the downside for a nice and easy risk to reward. So we'll trade it up on the day trade, which is a good opportunity that could possibly present itself. But keep in mind, the overall structure is to the downside. Yeah, of course, get you a little 2R. And then if that go ahead and presents itself with the opportunity, take that mug. Then we'd be going to hit that take profit for 2R. Then we're in a good situation that maybe a day or two would be ready for us to go ahead and trade this to the downside for a nice 3R, 4R position. End up trading all pairs on all time frames. So all these pairs, that's why I don't just trade one, because why would I get myself stuck on Euro USD when I could look at Euro NZD and see that there's a perfect setup for a continuation to the upside for a higher high to be created, just following the most common pattern in the market on all time frames. Really prevalent impulse. I mean, this is like days after days after days, just setup after setup after setup, back to back to back to back to back. Imagine if you already know what to look for, what to expect, how you could take advantage of it on lower time frames. So yeah, that's what I'm seeing on a little bit of gold action. Could possibly provide a move to the upside for the daily, weekly, monthly, higher time frame direction to go ahead and get completed, or retracement to go ahead and get completed, and then put us in the correct direction for the impulse to the downside. Now, keep in mind, I don't have a crystal ball. I'm not Mr. Know-all. I don't know this stuff for fact. I'm going off probabilities. So the highest probability of the things that are likely to happen is what I'm pointing out. Just with the experience that I have, the back testing, research, and everything that I've done, and then the way that the market has played out with the way that I've traded and everything, this is what I've seen happen more times than not. Of course, it doesn't mean it's going to happen every single time, but more times than not, if we're starting to make moves to the upside, and we've just extended, we're starting to make moves to the upside on lower time frames, and we've just extended to the downside, completing the most common pattern in the market. The most common pattern in the market, we just completed it. Impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement. I know that we're in a retracement phase. So I know that the retracement needs to end at some point, because this isn't the direction the market wants to go, really. Just for this little brief moment, maybe for these 24 hours, maybe for these 18 hours, maybe for the next 3 hours. The market just wants to retrace a little bit, but the intended direction from a probability standpoint, from the directional standpoint of the time frames that I looked at, this is just a retracement. So take your little retracement trade. Bada bing, bada boom. Probably another little hour candle, show the retracement, make a move to the upside, come back down. We'll have some structure here. We got a nice and easy area of structure for the market to continue to the downside. But yeah, a little day trade. If it's there, you already know. We're never out of opportunities. We're never going to run out of opportunities, Jordan. Not us, not over here. Not with the strategies we got and the way the market works. Patience is the main thing. You may run out of patience messing around with USD or Euro USD. Where are we at now? A 0.08, 0.07, still playing around in this area. So that's good. I mean, not good, but we're not just disrespecting all this and just making moves to the upside. So that's good. Could possibly see the market hold the resistance level in here. Break down, break back into it, break down, break back below it. Bada bing, bada boom, bada bow. Then we start the retracement because it'll be about a week. I mean, tomorrow will be what, 6 days since the interest rate decision came out? Or tomorrow, was it tomorrow 7 days? Last week it was on oh, it was. It's been a week today. So a week ago today. A week ago today, that news came out. So it's been about a week in the market of just sentiment. So it could be possibly time that a week of bearishness give us that, and then, you know, a little exhaustion period before the market starts to continue into the bearish trend again. But who knows? Damn, now we getting down in the almost positive on the day. We closed the day. Which candle was it? This was the daily close. Right here. We planning right around yesterday's close, man. Yesterday's close, man. Mail. This was yesterday's daily close, man. And that's right where we at too. Definitely may run out of patience. We ain't gonna run out of opportunities. Never that. New trade every day. There's gonna be an opportunity every single day. Is it to be the best one? Maybe not. But we're never gonna run out of opportunities. Patience, capital. Those are things we can run out of. We can't run out of opportunities. Boy, when I tell you this works, shout out to my sister. My sister made me this. She does make those. The Greatest Gift Box is the name of the company. My coffee is still hot from 6 o'clock this morning for me, and it is 9:45 almost. And I don't have that much in it, so shout out to my sister. Appreciate you, boy. She does everything, all the little customizable things. Go holler at her or shoot me a DM. She made me a nice mouse pad as well. keychain, stickers, towels, all that good stuff. Should get you together whatever you want. And it's quality. We starting to break up, man. We're breaking above yesterday's daily close, man. That ain't no good. That ain't no good. It might be a go on their side, though. You know what? Just find another opportunity. Starting to make the move to the downside. Oh, I didn't see this candle right here. We have some structure that could possibly hold the market, and then we see a move to the upside on oil. On Earl. Some at Earl. Yeah, so question. What's the difference between a glass and a mug? I think I figured it out. I'm trying to see if anybody has the same thought process that I do. What's the difference between a glass and a mug? Appreciate you. And you can scan the joints, take you straight to the Instagram, take you straight to the YouTube channel as well. QR codes, I think that's what they are called, correct? Correct. Damn, Euro USD. We are exploding to the upside. Yeah, this one might be gone, man. This one might be gone, man. Which that was me trying to get a little bit greedy. Just a little bit greedy. Because honestly, my take profit was right around here. A little 275 action, which would have been the best one, but I wanted it all. I wanted it all, y'all. I wanted it all, man. I wanted all of them. I wanted all them. I wanted all them. And we broke right above this structure, so previous structure resistance broken to the upside should act as structure support. Correct. We should see the market making and breaking structure to the upside now. Where it will end, nobody knows. But these positions is looking like a goner. That's alright. That's alright. That's okay. We will live to trade another day. So I guess we'll go till the stop out. Damn, that's tough. Let's see what happens on the daily if we do start to break above. I mean, we are due for a retracement at some point. You know what I'm saying? You know what I'm saying? Damn. I know one position gotta be closed at break even. Yup, there goes one. Let me look. Let me look. Let me look. Damn. Whoa, damn. Ooh, it came close. It came close, and that's probably the hit right there. Oh wait, I forgot to move that one to break even. Break even on one. And then we're gonna watch it. It's gonna hit. Let's see what happens. Let's see what happens, Captain. Now watch. Oh yeah, there are some more talks. But that's what I was getting ready to say is watch. This spike up. This spike up will be followed by, you said it's news. By JP. Wrong week. Today is when? What's today? Wednesday or Thursday? Today is Wednesday, right? Oh yeah, that boy JP speaking. That boy JP speaking. And we got some home sales. But watch. We had some speaking earlier that caused GBP JPY or GBP pound to spike around. We're getting a little bit of spike now. Then we'll get the news. The news will complete the move. Now, if I'm still in the position, that's up for the market to decide, but watch. Or it could go ahead and just start making moves to the upside. This could be the news that we need to see the market propelled to the upside for more continuation. But either way, I ain't mad because there's always another trade. Yep, you called it, J Money. You're gonna have this move up. We got all this talks. And then we'll have the market correct itself. Low key want my other position back. I want my other position back. See, look, gonna come stop me out. Break even. And continue to the downside. Or just explode to the upside. But either way, that's what I was saying. Once my risk management it was on place, on point, I'm no longer worried. I'm not trying to find another short position just because I got stopped out 30 seconds ago. I don't need to get back into the market right now. I could just find another opportunity. It sucks. Got stopped out. I was probably running at about, at one point, could have probably gotten a nice and easy 3R out of the trade. Ended up getting nothing. Shooting for
4.5. So that's a lesson in there. I was waiting for another 1.5 R on a day trade. So got into these positions yesterday. Keep in mind that yesterday, it wasn't 3 weeks ago, I've been holding these, so I continue to hold because I've been holding for so long. We've gotten into these markets yesterday and they ended up printing out 6R. I've lost 3R waiting for 2R. So I've lost more waiting for the little extra 2R I would have gained on each position, which is a lesson. Don't just randomly take your profits because you're running. Have a set take profit is the lesson. Have a set take profit, but understand what you're getting, what you're doing. So like I said, any day trade, you have to be able to accept that a 2R risk to reward. Once that is met, you can't complain anymore because the market's giving you, for the amount of time you put into the trade, for the amount of time the trade has gone, and just overall what's expected to happen in the market, you can't be mad that the market gave you 2R, you didn't take it, and now you no longer have it. Same way, I can't be mad the market gave me 3R, and I waited around for 1.5R, and then the market took that away. Like, no, I'm okay with that. I know that for Jordan, maybe this is a good lesson for you to understand that concept that, hey, anything over a 2R, if you're looking for, say you're looking for a 6R trade, the market gives you 4.8R. You can't be mad on a day trade that goes 4.5R. So you can't be mad on getting 4% in one day on one trade in a few hours. You know what I mean? Oh, here's the retracement that we needed. Damn. But yeah, still in. Like I said, I don't close out early. I'm either take profit or break even. Oops. See, it was close. It was real close. There we go. It was real close. But we still rolling. But at the same time, I can't be mad either. If this position does end up turning around and hitting take profit and blah, 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 now I'm the greatest thing in the world and I told y'all so, and look, I called it and this has been out and I know what I'm talking about. If it does hit take profit, it's a 4R day trade that I've been running risk-free for 16 hours. I can't be mad. I damn sure wouldn't be mad. I'd be happy. Come out of here instead of 8.5R, go ahead and get 4R. Then there's possible another setup that maybe could present itself if that does happen. Say we do something like this. Hold on now, boy. See if I can get a nice little 2R being conservative. Hold on, boy. What you talking about, boy? Yeah, watch. We're gonna get this drizzy drop. Was he supposed to do it at 10:15? 10:15, that boy JP on the mic. That boy JP getting the mic. Microphone check, 1, 2, what is this? JPP is back to business. We did break up above yesterday's daily close. What does it look like on the daily? Pushing. Push it. What a retracement, though. I still want to see this overall target met. Even if I get stopped out, I still like to see that this target get met. Just looking at price action on the 4-hour too. Yeah, now I'm low-key getting heated though, because price is just creeping back down.
but using everything we know, adding it all together. If the market closes like this on the 1 hour, what do we have? What does this candle represent? With a long wick to the upside and a body that's about half the distance or lower, we would expect the next candles to come fill in the wicks. So it's still not looking good. I'm still not trying to just go ahead and jump in for a re-entry sale or set another limit right here that if it gets retested, it just doesn't make sense. But what I am looking for is a possible situation that I could look for another entry. So I'm risk free, but it's just not setting up. From what I need, just things aren't lining up. The confluence wise, the rules of the strategy wise, things just aren't adding up. So I can't really look for a re-entry to the downside. But tomorrow could provide the opportunity with what is happening today. When you say, I remember the days where I would get on the charts, not see anything favorable and say no trade for me today, sitting on my hands. 30 minutes later, I'm in 2 trades. Facts. Big facts. Like, nah, I don't want to trade today. But you know what? I can make a little quick trade right here. Nice little 1-to-1 trade back in the day. Damn, it just all sounds bad now. Let me just go ahead and take this quick 1-to-1 for the day. And now this market's been consolidating for the last 12 hours and you over leveraged and price went up but came back down and you weren't even at the charts at the time to close out, and it's about to be market changeover. And your stop loss is kind of tight, so you don't want the spread of the market changeover to take you out and the market go in your favor, so you remove the stop loss and then spread comes and you, dang, it's taking all my money, these spreads, and then the spreads close back up, and then now it's not even at your entry, it's just sitting in drawdown. It's like, well, dang, maybe I'll just add another position right here. Yep, I already know the story. So bad. So bad. But you know what? We here now. That's old news. Shit, I was in the same boat, bro. We did get the hour close that we did not want to see, so we could see further continuation to the upside. Like I said, JP could speak. This thing could just drop off. He could say something. Or he could just come into the, make the markets just jump. Change the sentiment of the market. Because we are so bearish now that it's kind of, I think the banks and the hedge funds are so one-sided with all this movement to the downside that it would be hard for it to correct itself if it doesn't do it soon. Like, a lot of these markets are so far bearish that it would take a lot for the market to, so it would take the retail traders thinking that there was going to be an opportunity for buys. But once the market has been so bearish, eventually they'll get smart and be like, you know what? Let me start selling. The market's been selling. I've been catching a falling dagger for so long. Let me try to sell this market. And you know how long that's going to take for the retail traders to get that sentiment? We just looked at Euro USD and there were more buyers than sellers, and the market is in the depths of everything. Where was it? Oh, right here. Look at this. 40% of traders are short, and this is probably taking into account retail traders as well. 60% of traders are long. Do you know how long it's going to take the market sentiment of retail traders to switch to the actual market structure? And then that's when the big banks and hedge funds can start, placing their buys, taking your sell liquidity to make moves to the upside. So I think that with Jerome Powell speaking in the next 10 minutes, it will either continue the trend to go ahead and hit this news, we're going to complete the move, and then we might get a little relief. But for the most part, I could see his his speech propelling the market to the upside as well, vice versa. I'm no expert, but what I do know is the trend is my friend. And I do know not to just hop into trades blindly because some news is getting ready to come out, especially not right before some news. And I also know to give it at least 10 minutes, 10 to 15 minutes to settle after the news does happen. And with speeches, it's not an exact moment that the news is supposed to come out. So he could say something 3 minutes into the speech that affects the market. He could say something 47 minutes into the speech that affects the market. So it's really best to just let the market do what it does. And then once it settles towards the end of the day, come back on the chart and look for opportunities for tomorrow. So when I got into these trades yesterday, I had been looking for maybe all of London session, because it wasn't until 9:30ish, 9 o'clock-ish, we got into these trades. So about 24 hours ago, it wasn't until I got into these trades. So I don't need to look for trades throughout the day. Like I said, we go through it. Watch my newest video. It'll be coming out soon. Watch my newest upload. It'll be going over the losses in the signals chat that we're going through right now, my trading journal. And then as well, it's a big dynamic shift of how I switched from just calling out the trades right before they happen to preparing everyone with a watch list. Like, here are the pairs that I expect to do this tomorrow. And we're doing this at market close the previous day on what to expect the following day. So that is how I trade. I look for the opportunities that are going, I'm not just blindly looking at the chart, jumping in it on a smaller time frame, looking for the moves. I really analyze and pick out my setups, which is the way that you're supposed to do it. So regardless of what happens, I'm not trying to look for a trade probably for the rest of the day today until the market closes, until we get done with the live stream and all that other good jazz. So right around then is when I'm looking for the next opportunities for the following day. I don't really do too much during the Asian session, which is another trap. I'm giving out gems all in this. So it's another trap, Asian session. Not too much happens during the Asian session. And then price usually continues picking back up right around the beginning of London session again. So we can see market close. This was market close. Not really much. 8 o'clock. Yeah, some stuff. Started to make a little move. 9, 10 o'clock. Woody-woody-woo. Then right around 1:45, 2 o'clock is when we started to see, a failed attempt to make a move to the downside. Rejection making a move up. Another failed attempt to make a move to the downside. About 6 o'clock, price exploded. Did a little manipulation. Then started to make a move back down. And 7 o'clock, 8 o'clock, 9 o'clock, we had a little volatility come into the market. So I know that about 2, 3, 4, 5 o'clock, not much happens if we go back to yesterday. So from 2 o'clock till 8 o'clock at night, nothing really, not too much happened. We went from 9.6 about 9.58. So you're talking about 20 pips. 20 pips of action for 6 hours. That's not the type of trading I want to be in on. I want to be in on we got 9.629 down to 9.539. So 90 pips, that's the type of action I want. I'm ready for that type of action. And that started over here at about 8 o'clock, 6:30. And you prepare for that the day before. So the day before, at market close, right around this area, said if we get a pullback to this space and the price looks like it wants to continue to the downside, you could then look for the opportunity. We got a retracement back into this area. Price looks like it wants to start the continuation to the downside. Boom, entered in on this market and then start riding. Kicking myself for being a little greedy, but we here now. Boy, going on 4 hours of live stream. Hey, pretty nice. YouTube, you better give me some exposure again. I was in your good graces, and then you took me out when I took some time away. I'm mad at that. I shot up to 1,000 subscribers pretty quick. Looks like YouTube was messing with me. I was uploading pretty regular. Then I took like a month off. YouTube was like, oh, nah, you be falling off, bro. You gotta work your way back up. So with this 4 hours, and then I'm coming back later too, YouTube put me back in the good graces. Exposure. That's what we need over here. I'm trying to help people. You don't want me to help people. Help me help you, YouTube. You help me help you, help me help you, help somebody else, help them, help me, help them to help us. Oh yeah, it be like that, bro. Being consistent is so underrated. That's the number one thing that I'm just telling people now. It's like, hey, the only difference between the people who are quote unquote successful in say like the YouTube space, for example, when you look at somebody like Swag. So I'm gonna call out people that I've followed, and I can just tell you that the reason that they are where they are is just the consistency. Of course, they're good at what they do too, but that means nothing if you're not doing it consistently. Like, I remember watching Swag, Korean Savage, all the people from Black Ops 3, basically. So Black Ops 3 days when I was really heavy into that, and then Call of Duty, playing Black Ops 3 and just really grinding, I would find and watch those YouTubers, and back then they were doing every single day. Of course, it's different. I can play a 10-minute simulated multiplayer game, and then now I have content for the next day. That is my video for the next day, where it's different than trading, where it may not be a trade every single day. But I would watch them. Still to this day, I still watch them. I don't even play Call of Duty. I watch them play Call of Duty. But just the consistency from where they are has gotten them to where they are. Just doing that every single day, because there's plenty of people who are probably better than either one of them. I mean, you look at somebody like Aiden, who's goated. You look at Scump. I mean, all these other people, excuse me if I'm using references that you don't get, but these are professional Call of Duty players that are probably better than just the regular quote-unquote pub stompers, normal people. But the normal people, the pub stompers, Swag, Korean Savage, Tim the Tap Man's a good one. I mean, just consistently over the period of time has what built them up to where they are now. And then once you stop that, once you break that consistency, you got to start all over. So imagine doing something every single day for a year. And then once you got up to a year of doing that, say someone gave you $10 every time you did it. And you're going to do it anyways because you've been doing it every single day. But one day you don't do it. And instead of getting $10 or $100 or whatever it is, anytime you do that thing from now on every single day, now you got to go do it for 100 days again before you can get back to where you were you know what I mean? You get the idea. You get the picture. Consistency is where it's at. Once you stop and break that, it's tough. You got to grind all the way back over. It's kind of like lost time. So I built my channel up and did all that for like a year, then just fell off. Then after that, it's like basically I wasted a year because I'm going to have to take that same year of time span, do everything that I just did all over again. And then I'll be able to move forward and say, this is a new space I've never been into. It's all due because of consistency. So YouTube, if I just put y'all whole game out there, the playbook, what you want people to do is just make a whole bunch of content so nobody ever leaves your site. And the more people that make content all the time, every single day, all day, will get more recommendations. If you needed me to say that for you, YouTube, just say that. And I will. But just put me back in the good graces, pimp. Let me try and get about like 100 viewers on a live stream. Could have just said that. I mean, damn, just if you want that, just say that. Hey, once you start posting on YouTube, you cannot stop ever. I don't care what you said, what you do. Sign these terms of agreement, and you didn't read the fine print, terms of service. Yeah, no, seriously, that is probably why you didn't see it pop straight up. And that's why I just got to build all over. Got a few people popping in and out, but I'm sure it's just the time. Somebody else's stream may have ended. My stream was up, had the right words in it. Kind of tried to make a decent thumbnail, which I didn't make it. I just put it up there. Use that thumbnail. Doing everything to my advantage. Doing everything to my advantage. And just hopefully somebody pops in today. Oh man, this is new dude. I don't really like him. I don't really know nothing about him. I'm not going to hop into the middle of his stream and just start paying attention. But, you know, they see it up again later. It's like, oh man, this guy, he does this. He's live streams, and the person that I'm normally watching, or the videos I've already watched, all the new videos out from the people that I like to subscribe to. Let me check this guy out. Oh shit, he got some nice music playing in the background. He got a little sauce he's talking about. He dropped some knowledge, I learned something. Let me come back tomorrow. Boom, and the next day. And then he tells somebody, and then they tell somebody, and then boom, 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 boom. And essentially, it's whatever the viewer wants, because, you know, 17 people hop in here and say, break down CAD CHF. I'm gonna break down CAD CHF. Now they have a place to where they can get what they want when they go there. That's all everybody's looking for anyways. It's just like, I want my own station to do what I want it to do by the person I wanted to do it from. Not me, but other people with YouTube. It's like, hey, I want my own. I just don't want to watch. I want to watch nothing but Call of Duty, but I want it to be quality Call of Duty players, and I want it to be good people, and then on top of that, I want it to be somebody that I like. All right, cool. So then they give you swag, and it's like, oh, I like this guy. I mess with him. He's almost same color as me. He likes some of the same things. He's good at what he does too. I enjoy this content. Now, I watch his content and don't even play the game no more. So that's really it. That's where I'm getting to. This is a long journey. I ain't doing it for 1 month. I'm not even doing it for 1 year, not 2 years, but I think in the last live stream I said I just want to do this for as long as possible, like the market breakdowns, Monday, Wednesday, Friday. If I can do Monday, Wednesday, Friday live streams, eventually they'll catch on. A year from now, I may have 7 people in the live stream, but that's more than what I had before. So as long as we progressing, good things will happen. So he's speaking right now. As a matter of fact, let's do this. Jerome Powell's speech today. Let's see what he's talking about.
Good afternoon.
What if the market just went crazy?
Bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work.
Good morning. It just started shooting up, like skyrocketed. But no, let's listen to what he's saying and watch what's happening in the market at the same time. So they're saying they want to get back to the 2% market stability of everything. Let's see what happens in the market actually as he speaks. So I'm gonna shut up.
We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employee
oh yeah, it is the 21st. Dang.
Jobs.
Let's see. New speech. 28. Let's go to this one. My bad. You right. I wasn't even looking. No. Just the remarks.
Good morning, and welcome to the 10th Annual Community Banking Research Conference. I've attended this conference twice before, including the first one back in 2013, and I can attest to the quality of the research and the discussions. While I'm coming to you virtually today, many of you are gathering in person for the first time in 3 years, and I'm sure it will make an excellent event even more enjoyable. The Community Banking Research Conference brings together researchers, regulators, policymakers, and community bankers to discuss the unique and important role that community banks play in our economy. The conference was launched in the years following the financial crisis in a collaboration by the Federal Reserve, the Conference of State Bank Supervisors, and the Federal Deposit Insurance Corporation. The conference was developed to deepen our understanding of the community bank business model and to provide a forum to discuss research with academics, policymakers, regulators, and community bankers. The research presented over the years has informed supervisory and regulatory policy debates and continues to challenge our thinking. It has highlighted the vital links between community banks and small businesses, the availability of credit in low and moderate income communities, how community banks support their local communities in times of crisis, and the impact of technology. A critical feature of the research sessions is that community bankers join academic moderators to provide feedback from a practitioner's perspective. The challenges facing community banks have changed significantly over the past 10 years. Community banks have demonstrated remarkable resilience, and conferences like this have helped regulators and supervisors to better understand those changes. I want to congratulate the Federal Reserve Bank of St. Louis for a decade of hosting an important and informative conference. And I want to thank our colleagues at the Fed, the FDIC, and the Conference of State Bank Supervisors. On a sadder note, I also want to recognize the passing of John Ryan, who was president of the Conference of State Bank Supervisors for many years, who passed away this past May. John's impact on the CSBS and his contributions to the financial services sector overall were significant, and he is missed by all who knew and worked with him. Thanks also to the researchers and all the community banking professionals for their insight and contributions over the years. Thank you all, and have a great conference.
Let's see if we can see what they said in the conference. Can we get the conference going? Where the conference at? I'm trying. Converse. I'm trying to watch live, dog. No. I'm not registering for this. CBRC. Nah, well. So it's going to be proceeded to be broadcasted online September 30th. So we may not see nothing. It may continue as usual. Go ahead and stop me out, break even, and then whatever. Check back on the calendar. Got some Earl. Let's see what that Earl's doing. Oh, it ain't 10:30 yet. Let's see what that Earl is doing. Pushing to the upside, exactly as we like to see. Could see the retracement come. Nice and easy retracement into this area. Bada bing, bada boom. And then the move to the downside. So still in bearish market structure. Oil is Earl. Euro USD. Could see some consolidation throughout the day right in this area. End up closing and then see the continuation to upside tomorrow. Hopefully we get a continuation to the downside, but it ain't looking good. It's been about 4 hours, man. 4 hours, 15 minutes. I'll be back at 5:30. 5:30 to 6:30, somewhere in between there. If nothing exciting really happens, I'll keep you updated as well, but that might be it. I was expecting for this trade to be done before 10 o'clock, really. That would have been ideal, especially if we got the fake breakout, the manipulation right at 6 o'clock, and then saw the move to the downside by about 8, 9 o'clock. That would have been ideal. But since we're failing to break to the downside until we get another break of this level right in here, it's more than likely going to continue to the upside. So it is what it is. Yeah, it is what it is. Sometimes this is how the mornings be. It's how the day goes. It's nothing really too exciting. Like I try to preach. This is not normal. So I don't just be sitting here watching the charts, not doing anything in the morning. Usually I'm doing some other stuff. Like I said, get you a notebook, write down all the things you need to do. I need to do some shopping, go do some other stuff. It just happened to be so early in the morning that nothing was really open, so I figured I'd just hop on. But now we're starting to get into the day where businesses are running, things are open. I got things to do. I come to the chart at a specific time. I look for opportunities for the next day. I wait for those opportunities to present themselves with the rules that I put in place before I take the trade. I follow risk management, and I let the market do what it does. Other than that, I don't really sit at the chart just watching stuff. I mean, I will for the live streams because I don't mind interacting with a lot of people or trying to engage into some people or help somebody out or do something like that. I actually enjoy it when it pertains to trading, but me in my own personal life, rarely ever would you catch me just sitting chilling, because that's not how you're supposed to trade, and that's not what trading is for. Like right now, I could go through all my pairs and look for possible opportunities, just like GBP, CHF. GBP CAD, whatever we looked at. There's that GBP CAD trade too, J Money. Come back. I want to see a nice retest of this area first before we start to get a sell-off. But like that, I would put an alert here to let me know when the market has came into this area. Then I might briefly check it to see what it's looking like. I might hang around for maybe 15, 30 minutes to see what happens from there. But more times than not, I'm not sitting here looking. You heard my alarm go off at 9 o'clock. Like I said, 9, 1, and 5 are the 4-hour candle closes for me. It's what I use to time my entries on a lot of the trades on one strategy, and then I maybe use the hour time frame. So in between those times, there's no point in me looking at the chart because I'm waiting for the market to do something before I actually start to trade. So like now, I would say it's 10:30. I don't need to look at this again until 11, and then I briefly look at it at 11. If the candle closes are up in this area, then it's like, okay, I'll come back at 12. I want to see if the market's moving away from this area. If so, then I might stick around, come back at 12:15, wait for an entry, a possible entry that I use, and then once I look for the entry, find where my setup is perfect, this is why I use limit orders. Then I place a limit order. I put my stop, my take profit, and my entry level that I want to get in at all into my platform, all into my MetaTrader. And then I go on about my day. It'll either trigger me in, start to put me in profit, trigger me in, I'll be in some drawdown, not trigger me in, head towards a take profit, or trigger me in and go straight to my stop loss. Like, it is what it is. Either one of those happens, I'm either in the market, in the trade, and I expect it to play out the way that I want it to. That's why I put my limit there and got triggered. And then I risk management. I know when to go break even. I know when to close some positions if need be. Say I was taking a challenge and I'm up 2R and I only need 1R to complete a challenge. Then cool. I'll go ahead and grab that, complete the challenge, and go on about my day. Come back later in the day, look for possible opportunities as the market closes, looking for the next ones for the next day, do the same thing over and over and over. Rarely do I just sit and just be on the charts. I got a lot of other stuff I could be doing. I would rather be doing. Not rather. I ain't going to say that. Not stuff that I would rather be doing. I'm glad that I have the opportunity and the life and the luxury to be able to just sit on the computer for 4.5 hours chilling and not really lose too much out of my day. But at the same time, that's not what I do. I don't just sit around all day. Big facts. I don't just sit around all day. I can go get some other stuff done. I can go talk to some other people to make sure that they understand the program and the strategies that are in. I can go work on myself. I can go get something done at the gym. I could go get some food. I could do basically what trading is providing you. It's not supposed to provide you with a 8-hour workday. It's just an opportunity for you to make money in the market. That's all trading is. It's just an opportunity. Whether you spend 8 hours on one opportunity or you spend 8 minutes on one opportunity. Either way, that's all the market's there to provide. It's just multiple opportunities for you to necessarily make money and not have to work for it. Now, the work is done beforehand. And don't get it twisted. So when I say the work, yeah, I don't sit at the computer trading all day. But I may sit at the computer for 5 minutes, 10 minutes, 15 minutes, analyzing trades, looking for trade opportunities. That's the work. That's what's done behind the scenes. Once you're in the trade, there's nothing really to do. You're just looking for a trade is where I spend most of my time. And it's not really that much. So how I went over GBP CAD earlier, this is a trade. Like say I was looking for a trade, I'd go ahead and set my stuff up, put an alert right there, then go do whatever I got to do. Whether that's watch YouTube, think of content ideas, go get some food, go furniture shopping, build a desk, whatever it is I need to do, I can go do that and not feel anxious or stressed out about the market. So if you like that idea too, and you've made it this far, or you happen to be in the live stream at this time, click the link in the description, man. It's the link to my program as well as some other links too. But go ahead and check out the program. I promise you won't be disappointed. You'll probably be more satisfied than anything. I really want to underpromise and over commit on the things that I say. So with everything in the program, everything in the program will teach you the same things that I know. There's nothing hidden in there. There's nothing that I'm hiding or trying to sell you more on in there. It's just basically the knowledge that I have, and probably a different way that it hasn't been taught to you. That way it's easier for you to grasp. It's not going off old theories and concepts that you went off of with just a different angle. It's actually a whole new type of way to trade the markets and go about trading the market. So check that out if you're interested. If you want to get back some of your time, if you notice yourself sitting at the charts or constantly looking at your phone or getting into trades and you don't know why, or being in trades and not knowing when to close because you don't know if you're going to get another trade like this again. Like say you get a trade that's running 8R in profit. You don't know when you're going to get another 8R trade, so a little less experience. You leave that open because that 8R might turn to 10R, might turn to 12R, might turn to 18R, and then you end up getting stopped out break even. And now you're kicking yourself because you didn't get any profits and you could have gotten some, and that's where the stress kicks in because you don't know if you're going to get another trade like that again. So you know it's possible, but you don't know how to do it. That's what the program provides for you. It gives you a clear mind as to what to expect in the market. That way it eliminates most of the fears and stress that you have, FOMO, all that in the market. So you can just trade the way that you're supposed to trade and go about it that way. But like I said, my Euro USD trade isn't looking too hot, but still go back to GBP CAD. And Jordan, you said you would have probably been in over here. Now you're sitting in drawdown, and the market hasn't even showed you a change of direction yet. So like I said, on the 15, we would still need to see some sort of structure broken for us before we can actually start to look for an opportunity to trade this market. This is still what I see. Of course, this isn't exactly what I'm saying is going to happen, and if it doesn't happen like this, I'm not going to trade it. But this is kind of the general idea of what I could possibly see happening. Come back into the area, come back up here, maybe retest some of these areas once again, and then if everything that we use, all of our rules and everything is satisfied, then making the move to the downside. But not until we start to break structure to the downside, because why would I want to sell when the market is making higher highs and higher lows? So even though we didn't make a lower low, we came up and made essentially a higher low, higher high than some of these over here. So not necessarily this high, but if we drop down to the 5 minute, you would be able to see that we've been creeping up, making higher highs and higher lows on this market. I know from a 15-minute standpoint that even if I get a clean impulse to the downside, now this is stuff that's in the program too, or that you'll just actually learn through the program. If I get a clean move down and a clean move up, there's really just no opportunity for me to look for a move to the downside. I was noticing that on a lot of these indices. That if I can get, without structure being in the picture, with something like this, trying to find, all right, so something like this, and I move back down. These are clean moves. There's really not a possible opportunity for me to get in. I mean, yeah, there's one I could make, go down on smaller time frames, or even use this level right in here, but essentially there's no way for me to get in on that. So going back to GBP CAD, I know, or I have experienced, that even though I got a breakdown, break up, I got the retracement, and then I got what looks like to be the next impulse to the downside, it was just too flush. There's no structure for me to go off of for an entry the way that I use it. I'd have been in there, no hesitation, sitting in drawdown. But there's no possible way for me to get in. The next logical thing is to think logically, well, if I get some structure created right here, I got a little bit of resistance, and now I got a little bit of support that either or broken could give me a possible opportunity. And then from there, I'm thinking, all right, that'll work. Because if I have a little bit of resistance here, and mind you, we weren't all the way up there. We were back here. So now that I know I got resistance and some structure support, if I get my structure support broken, then I can start looking for sales. But probably going to want to retest these highs. And then if I get the highs retested, I do have a strong level of structure that I can look to build off of. Now my entry may not be all the way up here. Now I can look for my entry to be right around in here somewhere. Then look for a move after I get the move to the down, breakdown, all that, and go through everything that I go through or everything that I say normally. So if we move to where we are now, you can see we're coming in and retesting that area perfectly, starting to get the rejection that we would like to see. And we don't just place our limit, put a stop here, with the take profit there. Why are you selling in a market that's creating higher highs and higher lows? It's not good trading. But what you can do is be patient and wait for the market to pull away. So let's see what's going to happen. And on top of that, if you were triggered into this, or if you did go at market execution, say you just wanted to enter because you didn't want to miss out on the trade, now you're sitting in this drawdown and your stop's up here. But since you've committed to the trade and been in drawdown for so long, that's when, oh, well, let me give it a few more. You're screwing your risk to reward. You're messing up the risk that you had. So your 1% risk is now more than 1%. Does all this other stuff, plays on your emotions to where I'm just going to be patient. I know what I'm looking for. I know what I'm expecting. I'm going to wait for that because if the market, like I've been saying, if the market does what I expect it to do, more than likely it will continue to do what I expect it to do. So the market was up in here, came back for a retracement, a little retracement. I expected the market to come and retest this previous structure support that should now act as resistance. It looked like we tested it, but we didn't. I know from experience that happens a lot to try to get traders to sell or to enter into the market before we actually get the move. And by then, you've been in the trade for so long that you start to marry and commit to the trade, and it plays around with your emotions. Even though it may not hit your stop loss, it's one of those where it's like, well, now it's 4 o'clock in the afternoon, prices or the day's getting ready to be over. Let me just go ahead and close out, blah, 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 blah. Instead of being patient, understanding how the market is supposed to work, now I can wait for the market to come into this area, then kind of move away from this area, match up with the rules and everything that I have, and then look for an entry. So not only am I saving my mental capacity, I'm freeing up, not really worried about what's going on in the moment, not checking my phone every 2 or 3 minutes. And then on top of that, if the market does come back and retest this area exactly as I would like for it to do, that means if from here I start to get the rejection and then a retest of this area of somewhere up in here, more than likely it's going to continue to do what I think it's going to do. So more than likely, if it's already done this and continues to play out the way that I think, it's going to continue to go on to do what I think it's going to do, which is hit take profit down here. Is that 100% accurate all the time? No, but it does happen a lot. So let's check it. Let's check it. Let's keep it updated. What we got? Once I get stopped out, that's probably going to be the end of it. But we here. Let's see if we'll get the push stopped out, break even. So you just gonna play around, huh? Already got stopped out, break even on the first position, on the other position. Here we go. Here we go. Here we go. One more push. It's probably like 5-10 pips. Euro USD's been jumping lately too. I ain't even gonna lie. I ain't gonna hold you. I ain't gonna lie with you. Euro USD been moving. All right. And the messed up thing is too, Jordan, when yours hit take profit yesterday, I looked at it. I looked at mine and saw that I was at that area that I spoke about that I probably should have taken profit at about 3R. And I was like, it'd be all right. What was that? A new memory. Now we really just gonna play around. But yeah, I was at that area and I was like, dang, I should probably take some profits, but I want to be greedy and I want 8 when I got 6 sitting right there. And I've already lost 3. 4. My bad, lost 4. Because it was a 4R trade I was looking for, but I lost 3R in profit already. Probably lost about another 3.5R in profit already. All right. That's what the alert's for. But here we go. Here we go. Let's see where we at. We got about 13 minutes. I know this candle's gonna close above. It's gonna hit it with this candle, but I don't know if it's gonna do it within the next 13 minutes or the next 30 seconds. Imagine if it just fell off the face of the earth right now, right on the stream. Oh, I'd be talking shit, boy. I'd be talking shit. Look at all these people putting their sales in right now. They're thinking it's at previous structure, resistance again. It's going to sell off. Resistance, it already sold from this area. This candle's just going to play around, ain't it? Trying to entice some sellers, man. They think they're getting in at the top. But really, it's just market structure. Come on, Euro USD. This thing playing around, bro. But imagine a $118 pip drop Imagine 120 blah, 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 I can't even speak. 120 pips to the downside. 3639. We're entered at 641. So about 2 pips away from stopped out. What it's going to do is spike up real quick. You're rolling at about 300. Oh yeah, GCAT would have been no bueno. But no, you good. I'm probably gonna get off here whether this hits break even in a little minute. I'm sure within this candle close. Probably hop on off here, but GBP CAD, yeah. I ain't tripping. I'm about to get off here soon too. Gotta be back at 5:30. 24-hour stream? Wait, what's up? What are you talking about? Shit, I'd leave this on stream and be gone in the other room. I'll be back every now and then. Y'all can see me walk in this room and walk back out. But yeah, they think they got that snipe on Euro USD. But watch it come back, retest previous structure resistance, now turn support, break up to the upside. GBP CAD though, hey, I be trying to tell you, follow my own dang rules. I'm mad off CHF JPY too. Took 3 trades on it, stopped out, break even. All 3, and now watch it explode to the upside. You have this one to see this move to the upside. Previous structure yet to be retested, can expect to be respected. I noticed there was a video I kept saying can expect to be expected, but previous structure yet to be blah blah blah. Now I can't even say it. Previous structure yet to be retested, can expect to be respected. I went over that strategy in whatever playlist that is, day trading strategy. Ended up getting some nice entries. Price broke up, was able to go risk free, came back, stopped out, break even. I'm like, okay. Well, the overall trend is down. I just wanted a nice little day trade retracement back up to here. Since we failed to do that, stopped out, break even, gave me a good opportunity to look for the move to the downside for the lower low to be created. Ended up getting that. And then price came back, stopped out, break even again. And I'm like, well, hell, maybe it doesn't want to move to the downside quite yet. Let's retry this move back to the upside. Got in, nice, was able to go risk free. As soon as it came back, stopped out, break even. Now look at it. Blah, 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 blah. Probably go ahead and reach that area too. It is what it is. Euro USD and GBP CAD might provide the move to the downside at the same time. You got the alert set on Euro USD. Let's check out GBP CAD real quick, man. I actually like this. I actually like this right here. I actually like this setup. Let's see what that would be. 14.4 pips. So this is what you do. You set out your, you go on TradingView. First, you do your analysis on TradingView, all your analysis on TradingView. That way you keep it consistent, and they have a pretty good platform as well. So this is called a risk to reward tool. It's telling me my risk to reward ratio. I'm getting a 2R risk to reward if I trade this trade right here. So now that I have my stop loss, I know where my stop loss is going to go. It tells me the amount of pips right here at the top, 14.4. It says 144, but I know that that is 14.4. So then you go to this calculator right here. You get your My FX book. You get My FX book on your phone. You go into My FX book. And then you go to calculators. Currency pair USD or currency USD. Currency pair is what? GBP CAD. You go to GBP CAD. Amount to risk is 1% for me. And my stop loss in pips is 14.4. If you see somebody not doing this before they trade, they just do a random standard 5 lots because they know they have a 15 pip stop loss and they've already figured out what that is. Nah, that's not what we do because every trade is different. We want it to equal the same thing when we lose every single time across the board, regardless if it's a 100 pip stop loss or a 10 pip stop loss. It needs to equal the same. So I go down here and I realize that when I put this in, it's telling me that if I use a lot size of 9 lots, 7 mini lots, and 7 micro lots, so a 9.77 lot size on this trade, if I win, I will win twice as much as I lose. So if it hits take profit, it will be 2R. If it hits the stop loss, it will be 1R, 1 risk. And that is how you trade. And then you figure that out. And I'm not ready to enter into this trade yet. But once I am ready to enter into this trade, I'll slide over to my trading app. And then I'll just put in the numbers. So I'll use my 9.77 lot size at 1.46501. I'll put my stop loss at the number the stop loss is, and I'll put my take profit there. And then I'll place my order when I'm ready for the market to come trigger me in. Right now, I'm not ready for the market to trigger me in. But if we do get a breakdown below this level, I could look for an entry. I probably will look for an entry right around this area for a move to the downside. Euro USD is being a pain, bro. I mean, I'm not mad I ain't stopped out yet, but if it's gonna go ahead and stop me out, don't come 2 pips away from my entry twice and then start to come back for a retracement. But like I said, it's just normal market structure it's in right now. After we exploded to the upside and failed to break lower to make a lower low, we did reach another higher high, higher low. Then we started to create some minor structure in this level, creating higher highs, higher low, higher high, higher low, come retest previous structure, break above it, look to make a higher high, but we're failing to make a higher high as we are currently. In about 3 minutes, I'm sure this candle will break above and go ahead and stop us out, break even. But from there, I'm just looking for the market to continue until otherwise. I have no need to be in the market for sales if the market is making its way up to the upside. It's only when the market is making moves to the downside that I should be looking for sales. All right, like I said, about 3 minutes. Just enough for the retracement to come. 2 minutes. Right now, sitting at like 0.03%. Sitting at about 0.03%. Let's see if we'll get stopped out. I need the announcer for the Yankees to be right here. And then Aaron Judge with the swing. There it goes. A 2-run blast. Zero. $20 seconds. This is low-key a workout.
It's 11 hours.
Bruh. Let me check on GBP CAD then. Didn't pull back. But hey. What kind of pattern do you see today? Boom, bow, beep, bop, boop, bop, bow. Look at that. Look at that. Look at that now. Could see this come complete at the neckline and then continue to the downside as well. Just everything's lining up. Okay, Euro USD's making moves to the upside again. Splunt. Da-da-da. Jack Bandit. Young, move that dough. Young, move that dough. Push it. Push it. Bruh. The power of the entries too, you can see it's having a hard time coming back to my entry. My entry was protected. Stop loss is protected. Alright, bro. Alright, Euro USD, you got it, bro. You got it. Don't have me on an arm workout. Make sure the levels is good. Make sure my levels is good. I'm gonna make a new playlist too, a new track for the stream. That way I got a couple of them. I was only initially gonna do one playthrough. Bro, I think this damn thing's been played 2.5 times already. There we go. Here we go. Here we go. And that's all she wrote. That's it. That's all she wrote. It's gone. We was stopped out. Stopped out, break even. Damn. Tough. It's toughy. That's a toughie. And it slipped me, I think. Nah. That's all she wrote, y'all. That's pretty much going to be it for the stream. We'll be back 5:30 to 6:30. Monday, Wednesdays, and Fridays as well. Let's see what GBP CAD doing. Still pushing to the upside. So we'll let the day play out and see how the day ends and look for new opportunities going into tomorrow. But yeah, we'll be back today, later on, live stream. Same spot, same place. Make sure you're subscribed, post notifications turned on, and I appreciate you. J Staff, always appreciate it as well, big dog. If you came in, viewed for 1 second, if you viewed for an hour, 4 hours, 3 hours, 2 hours, 3 minutes, it's greatly appreciated, man. But with that said, hope y'all are having a profitable day on and off the charts. Because today was not as profitable for me as I'd like it to be. But we still profited mentally. Education. But that's it, man. Catch y'all later.